Good morning, everyone. Market just opened up. Sorry, running a little bit late. Already. Still, I need to go live. Alright, folks. Good morning. Today is FOMC day, so most likely premiums are higher, so price might move. The market will be a little volatile. Yeah, in the morning time, but premium will be a little higher, so be careful. There might be a little bigger, longer move. Alright, so most likely premiums are higher, so price might move. So most likely premiums are higher, so price sorry. The market will be a little volatile. Okay, that is set. All the stocks are flying high, folks, today. Flying to the roof. Everything flying to the roof. But the SPY is not. Can you believe it? What is going on here? Can you believe it? Meantime, folks, click the like button while I'm doing this process. If you could, that would be great. Alright, still I need to do a lot more here. Alrighty. Look at the caterpillar, still dumping. Already. QS, this is all cyclical. Carvana going down. Okay, Mara, the Bitcoin stock is going down. Whatever pre-market is up, going down right now. Alright, folks, I'm trying to set up Palantir is still going down. Boeing is. PayPal. Interesting. Shopify going up. Teladoc. Alright, so today Microsoft is going up, Google going up, Amazon down, Meta going up, Tesla going down. Alright, so these are the all. So look at the Microsoft is like flying high 340. Microsoft got a zero weakness, man. Alrighty, NVDA POC right there. Tesla got the POC. Microsoft is look at the Microsoft, man. Alrighty, then look at Apple below the POC. So Apple is controlling the S&P 500 probably. Alright. So we went through the resistance right here, so that is bullish right now. Okay, look like heading. Yep. All right, so that's okay, that's part of the things. Let's start with the disclaimer. This audio video is for education purpose only. I do not sell any financial advice, nor I recommend to buy or sell any sort of stocks or investment. For your financial advice, please consult with your professional financial advisor before making any financial decision. Also, make sure do your due diligence before you enter into any of your trade. It could be very, very risky, folks. You could blow up your account. Okay. All right. Today, so folks, today's FOMC, right? 2 o'clock, 2:30. Jerome Powell comes in, right? So I'm planning right now not to go crazy anything. Maybe if whatever I do, I will be playing coin. Means 1 contract, 2 contract, like that. Nothing crazy. Okay. Don't want to jump in any bandwagon here. We just wanted to go with the easy. Nothing running away here. We all need to learn to control the emotion. That is the first step we should have. Particularly when market is moving, we need to learn that time. Okay, what I see here is, oh yes, 30% premiums are jacked up. Alrighty, look at the market conditions. Are bullish looking right here so far. SPY is not doing anything, folks. Okay, so mostly today what you will see is mostly stocks might bounce. Okay, right in the morning. Microsoft looking strong today. Microsoft is the best. Look at that, folks. Look at the Microsoft today. Market start creating the bearish diversion from pre-market. Yeah, did you notice that Microsoft is creating the bearish diversion? Interesting. Alright, nothing happening around here, folks. You just need to give it a little time. Alright, bears are in control right now. POC acting as a resistance. So mega cap is bouncing. Interesting. Alright, that's your Google bouncing, Microsoft bouncing, NVDA bouncing, Apple is bouncing. So QQQ is Yeah, bullish folks. Okay, market is looking little bit. Look at that. Interesting. Market looking bullish for the cloud wise, but the bears are in control. Yeah, look at that bullishness. Market looking nice and bullish. Look at the QQQ today. Mega cap wanted to fire today. Mega cap is on a fire. Just bought a one call, one contract. Look like MACD trying to curling up a little bit. Maybe we're gonna go little. Nothing. Okay, this is not gonna print anything. That's why I hope you understand. My buying one contract is nothing. When you buy one contract, is loss is limited, right? Hope you understand. No, doesn't make any difference if I become zero. So I can experiment more. The bears are trying to give up. The MACD did not cross yet. The light end of the tunnel. So let's see if it is bearish diversion or not. Yeah, look at the bears are in control still. Need to wait for it. Squeeze coming in. Look at Apple is already flying high. Look at the Microsoft today. Google, Microsoft. They could use Google today. Just a minute. Oh, market going down already. Mostly if they go down today, folks, that would be the better, and then they take it up, right, to the 200 SMA, something like that. I'm thinking, God knows. Let's see. Whatever they do, we're gonna plan accordingly. I'm right now not doing anything, only one contract today throughout the day. Until 2 o'clock. Still MACD conditions are a little bullish here. Oh, look at that. Ticks are going up, going to the roof market. Wow, look at that, flying through the roof. Boom, boom, boom. How quickly you can exit is important. Yeah. I'm gonna pull back. Small sloping support build in, but that could create a little here divergence. Right now MACD crossing, light end of the tunnel coming in. Setup looking nice and bullish here. Let's see how far. We need a couple of building. Manhattan Tower look like nice. Look like nice. Look at this volume coming in, bullish. You see this trend line, nice and bullish. We need to follow that. Boom, boom, boom. Ticket to Hollywood. All right. So that's lining up. Well, let me see where could go. Okay, let me see where we could go. Psychological numbers. $421.38. So keep it in mind around that area. 421. All right. So let's see. 421. Quite a bit. So we just started this marathon. Let's see now how far marathon goes. Before the marathon goes all the way, there'll be a bunch of drama before they go. Tesla pulling back. Our market is already starting giving up here. Ticks are going up. Bulls are in control. Ticks are going down. Still bulls are in control. MACD started giving already here. Let me see this. Let's see. Yeah, they want to go low a little bit now. Alrighty. Bulls already started giving up. MACD curling. Still bullish. Alright folks, good morning YouTube, good morning Discord, and good morning Twitter everybody. Please click the like button, would be great folks. Market creating the bearish diversion here. Volumes are still bulls in control. We need to wait until what happens after that. Target is right here. We got a rejection, still be trying. Bulls are in control a little bit. Okay, boom, 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 bulls. Apple got POC. QQQ wants to break 419.86, 420. Rejection coming in. So today, for folks, slowly IV goes up, your theta decay will balance it out accordingly. So nothing too much worry about the theta today, because the IV slowly goes up as the time come closer. Right. So we got a double top here, rejection, get out of it. Or I'm out. Took a dollar profit. $80 I made. Market still bullish. It's just holding here and there. Let them do whatever they want to do. Oh, the bung. I need to add you. Okay. support right there. MACD crossing down right here. What I'm thinking, this is another side. What I'm thinking, okay, so that all these bulls are excited, they slightly go up and then bring it down, and these bulls are here trapped and then go down, 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 down here, right? All the bear, and then trap all the bear at the bottom by 1 o'clock, 1:30, and then FOMC start 2 o'clock and move market from 415 to 425, $10 SPY move, right? Something like that they could do, right? That is probably gonna break the 200 SMA. Market keep creating divergence. You can see that keep going up, keep creating bearish divergence. So market, only the cloud conditions are bullish, right? It's holding. Still the bulls are in control, but the market keep creating bearish divergence, and premiums are already 30% up right now. So you will be paying tons of premium. So plan accordingly.
Josh, I don't know if it counts, but market left a pre-market gap at 8 a.m.
Yep.
I don't know if they filled pre-market gaps. At 8 a.m. there's a pre-market gap.
Yeah, there's a gap here, so they might go and fill the gap later. Right now they're gonna make everybody bull a little bit and then trap at by 10:30, 11, trap a little bit and then take a cycle change, and then everybody will think, oh, it's gonna fill up the gap, and they might not even fill, probably. Let's see. Look at that shootout. Woohoo! What was that? That is bullish, man. Look at FOMC right now. Did you see that? That is FOMC going on. I love that. Love that. If that is the case. Look at the bleeding right now. I love when they do this. Okay. Boom. Look at the flush. Okay. I bought a small call, one contract. It's right at the bottom when all this happened. Now try to sell it back to get the dollar. Look at that. That was a lightning round, huh? Boom, boom, boom. Ticket to Hollywood. Look at ticks are going down, market going up. Something is brewing, man. Look at these, bulls are in control. That's why you see this happening. These are bulls are in control right now. Alrighty, ticks are going down. Market want to shoot up here a little bit. QQQ is under control. They might be using cyclicals then. Oh yeah, they're using cyclical a little bit. And nothing here, man. It's okay, whatever they want to use. Look at this now. Look at this. So this is going to go. Look at the ticks are going down. So today is the tick class, folks. Look, apply your tick class right here. You know why it is going. Loving it right now. I'm about to exit. Right now it's bullish, nice and bullish. Target is right here. They did touch that. Still bullish, but the tick is pushing it down. In the table turn on ticks, man, we could go higher. right now, look at that. Nope, they're pushing. Look at battle going on now. Look at the battle. Yep, we're gonna go through this. Interesting. You watch, we're gonna have here. Okay, Apple is going HOD. Bulls are in control. Just them, they are trying to keep the price lower. Pushing it down. Ticks are continuously going down. Price is still holding. Let's see. We need a tick to turn so we can go. Why? Because over here still bulls are in control. MACD is just hugging and kissing. Cloud conditions are bullish. We're supposed to go here. Look at this. Look at this. Right, I need this table turn. Alrighty. Man, now wrong. Okay, they want to push it down. The price is going down. TIX is now going down, and the bear. Interesting. The MACD crossing. You see this MACD crossing. Wow, interesting. So that they create a bearish divergence, folks. Watch out, divergence. Look at this, another divergence right there. Market creating divergence, bearish divergence. All right, get out of it. One bounce POC, I'll take the money and loan. Look like okay. I need a bounce so I can get out of it. Nope, they have a weakness. Okay, I'm out. All right, I'm out. $80 loss. Whatever I made, I give it back. Okay. Now look at that. Bears are taking over the control. Okay, bears wants to take over. So what does it mean? All right. The VWAP breaks, cloud breaks, bear could be on control. Let's see. Still the trend has not left the VWAP. So you see this sloping support is intact. VWAP is intact. Bulls are in MACD in a bull territory, but bears wants to take over the control. That's what I see right now. So let's see. Price actions are still in near the POC. Look, the ticks are going up. We're gonna go down. We're gonna go down most likely. Look at the ticks filling up the gas. I'm only doing one coin, only one contract, whatever I'm doing. So I make and I lose, I make and I lose. But right now I'm playing candle by candle for 1 or 2, 3 candles, having fun little things. Okay, so market has just several divergence creating, that means weakness. We just need the train to leave the station. All right. You see these VWAP breaks, sloping support breaks, then baby gonna roll because of the divergence. That's what I'm thinking. So what they will do is probably gonna test the VWAP, bounce, then break. Yeah. Look at the ticks filled up the gas. I just bought a one put, one contract on a put. At the POC, if they go, if it doesn't go. Still, look at that. We have bulls in control, okay? Remember, sorry, MACD in a bull territory. POC is right here. Resistance is here. Ticks are almost solid up. This flush should come and break the VWAP because they did test the VWAP. Alright, so Apple is below the VWAP now, QQQ testing the VWAP, and SPY is not testing yet. So let's look for the ticks now and see what happens here. We're gonna break the VWAP. We need a look at that. So ticks filled up the gas, now wants to go and take the VWAP off. There's a strong support here, sloping support, VWAP support. Still, I think there's a battle there. A lot of battle here would be. It's not gonna be in one shot. They might create this ascending triangle also. Look at this. Apple already started bleeding. QQQ is still holding a little bit. Okay. But the POC is battling. Alright, trying to bounce, folks. Okay, POC just moved down. Something is cooking out there. Alright, now trying to bounce. The best thing is to do is to not to trade on a higher premium time. Okay, remember that. After 2 o'clock, market gives a tons of opportunity. Look like MACD wanted to fill the gas and gonna go north, look, huh? Isn't it? Let's look at the week over the body everywhere, week over the body. We'll see. Still bullish. QQQ is above the POC. MACD curling up, bullish. Okay, get out of it. Take a $1.20 loss. MACD curling. This bear has no power whatsoever. Bulls are taking over. That's why this week was there. Look at that. Microsoft looking bullish too. Look at that. Continuously POC, playing around the POC. So what you see here is a smaller cycle market creating upward trend, going down, up, down, up, down, up, right? Small cycles so far. So upward channel, like if you see this channel, market is. Is Josh moderator on YouTube? Why? What happened? Alright, so still as per the cloud, we have a little bear cycle, bull cycle now. So this is somehow I feel like that they're gonna go a little bit up little, and then gonna create a trap until 11, and then go down. So these are the bull trap in the morning, and then afternoon all these people will get squeezed, and then they're gonna squeeze the bear and then go to the moon, something like that. That agenda could be. There's a gap left at the bottom here. That's the thesis. I don't take the trades on my thesis. Always wait. So today, folks, I will be not trading until 2 o'clock. Whatever I do, I'll be playing coin. Means one contract. Right? Bulls are in control. Nice and bullish. Wow. This is a nice breakout, folks, huh? Sorry. Look at this breakout. Look at the SPY breakout. They're gonna make you look like super bullish. Let them do. Market still want to go higher. For look at that. Still want to go higher. Yes. Ticks are filling up the gas. Want to go still higher. All right. Boom, boom, boom. might shoot out. Boom. Just made $280. Recovered my loss. Okay, so target is where we're heading right there, 421. What was it? What did I say? Was it? $420. They want to go right now, man. They don't want to wait for anything. Look at that volume. Today is the day. Look like Apple is going. Everything is one shooting star here. In the morning. QQQ constantly going today. $421.50. Look at the bulls are in full solid control. And market still has a strength. Market. Yeah. Look at the ticks going down. Market still holding the good. All right. Look at the QQQ, zero weakness. Now let's see what's cooking out here. Look at the tick, man, market still want to go. It might create around here bull flag or something, right? Because if they want to trap all the bear bulls, how do they do that? They need to create something. So they came all the way here. Now let's see how they will manage here. Alright. They'll create some pattern here at the top. I need to see what's gonna do here. We should give about 10 minutes, something like that. Meantime, folks, look at the 155 likes, folks. Let's get the likes done, folks. Let's get the like done. Let's get it at least 200 now. Ready? Yeah, slowly creating a flag or something they'll do. That would go, yeah, 175. We need 25 more, folks. 25 more to get it done. Somebody said I'm deep in 418 puts. That's the wrong way to take the trades. Okay, first of all, you need to apply today option class. The first thing is that. So that's why an FOMC time, what we learn in path to success, right? You need to do 1 or 2 trade, but that has to be the best, right? So in the morning we don't trade. This is dangerous. Doesn't matter buying calls or puts. We need to wait for it. FOMC gives you an ample opportunity. Slide pulling back. AMD shooting up. AMD, man, everything is going up. Look at the Meta. Look at the Meta, look at the Amazon, look at the Microsoft, look at the Apple. AMD, yeah, all. Only Tesla is dumping. Couldn't bounce on a strength, right? You see this, Tesla, market went up, right? But Tesla went down. So that's weakness. MACD crossing down here. Ticks are filling up the gas. That's why it's bullish, folks. Okay, you just give a little time. It's gonna go and All right. Still bulls are in control. Look at that. We need to wait for the MACD to cross. Until then is
Josh, was there any silent prints or anything unusual today?
oh, the black box was not working in the morning. Let me look. Oh, folks, look at the deal. Black box Friday, Cyber Monday. 14 days to go. Keep it in mind. No phantom print. Let's look into SPY. Puts coming in, but market want to go up.
Thanks, buddy.
Microsoft is bullish today. Let's look at that morning. Microsoft and NVDA. That's okay. Market will create a bearish diversion right there, folks. Market is creating a bearish diversion now. I don't know. Let's see. We need the volume to change to confirm. Maybe they create one more leg up. But the cloud here is bullish. So this is bullish still, okay, folks. Looking at the bearish doesn't mean the bearish diversion, okay. We need to find out the here right now still bullish, so we could go a little go higher. MACD is not crossing. Did you notice that MACD is not crossing? Now look at the weakness coming in. Did you see that weakness coming in? Started coming weakness. That's the bearish divergence. Squeeze coming in. Now look at this squeeze. Bullish. I don't know. Let's see. Let's figure it out. All right. Just bought a small one put, one contract. So over here, cloud conditions are super bullish. Remember that. This is like, look at that, constant bullish, right? So there might be a pullback, up down, still bullish. Okay, it's good. Divergence does not mean it's bearish. All right. So keep that thing in mind. A lot more pain ahead because the bulls are in control here. Full flash control, like solid control. Zero weakness. Look at here, still bulls are in control. Squeeze coming in. Oh, POC is right there. POC is right there. So they want to see what's they want to control the price here. Now we need to find out, see what they want to go lower or they want to go higher here. That's bullish. Market creating the bearish divergence, but look at the cloud here, man. This is super bullish out here. And over here, I don't see any bears are in taking over. I don't see the bears are taking over. We need the bear support if market you want to go lower, right? That's how things are. Right now, still bullish, so means this is good, but still bull can come in. Bulls are resting right now. Bulls are resting. That's how I see here. But nothing here. It's just the one coin. They could trap all the bulls and then go lower, but we don't know what time they could do it or not, and they might not even do it now. And they do it at FOMC time. Right now, MACD trying to fill up the gas. That's how I see here because of the squeeze. Look at here. We need to see POCs right there. So compression time right now. You see this? So whenever market compression is bullish, right? But we need a support from the volume to be bullish. So maybe MACD filling up the gas based on the cloud. See this? These clouds are bullish. Yeah, I don't see a weakness right now. This is strong bullish. You see this cloud? Look at the bullishness. Bulls are in full-fledged control. Look at these. That's why POC is there too. So stop going south, and POC says we're gonna go to the moon today, right? And then look at the light end of the tunnel coming in. See that? Okay, I'm out of my put. I took a $60 loss. Light end of the tunnel coming in bullish. So look at the cloud. They want to go to the moon. See this? Volumes are coming in bullish. Okay, I bought a call. Same thing. I'm playing between $400 and $500 calls, and put whatever I buy right there, and trying to make some few bucks here. Look, MACD is trying to cross. It did not cross. I don't know, man. This is interesting. Mm-hmm. $422. Market is about to hit the 422. Look at the cloud conditions. Okay. Weak about the body coming in. MACD could change the gear. Look like. Okay, I'm out on the call. You see this? MACD didn't cross in this move, and now they are flushing big. That means the engulfing candle coming in powerful. So they want to trap all the bulls and then continuously dump. That can happen. Just the applying thesis. Right, look at that. So we were right earlier, right? But here squeeze is not there. So then we need to apply the POC right here. Is acting as a support, filling up the gas or not. Going early is not a good idea. Okay, POC breaking down now. We need to see here, see what happens here. MACD bearish, volume coming, but we need Apple is bleeding. QQQ already below the POC. Ticks are bouncing here. We need a light end of the tunnel to believe. Yeah, look like coming in now. That's the diversion. Okay. POC is there. No volume. There is a light coming in underneath, man. Market want to break the things. So I bought a put. POC broke. Same thing. Not going anything. Just a coin playing. Divergent there, but support here. Cloud support probably would come here or something like that. So this is battle zone. You follow it, look like going and then bounce, something like that they do. Why? Because POCs, that's the reason POC is there, to squeeze everybody, all the bulls and bears and everybody. Cloud conditions are bullish, so might test here and bounce. So nothing to get excited here. POC is there. Look at the cloud condition here. POC controlling the price. Any bear cycle doesn't have the strength. Look at this last bear. This much. Same thing here. This much. Same thing here. Nothing here. You see this? And we had a bounce. See this? So bear doesn't have the strength. And look at the cloud conditions are getting stronger and stronger. So going on a short side is like daunting task right now. And particularly POC said, no, I want to control. So we'll see what happens here. You need train to leave the station right here. QQQ already weak, Apple is already weak, but SPY is not. So meantime, let's click the like button, folks. Let's click the like button. So what I think is MACD might feel the gas and rebounds because of the cloud. So there's still bunch of diversion creating, but holding the price good because POC bears doesn't have any power right now. now bears are getting taken over. Look at the volume. Trend has to leave. And then you have a Godfather cloud there too. So keep that thing in mind. So expect a bounce somewhere, cloud or not. Let's see. So this lower low, you see this market creating lower low, but EMAs are still bullish. So maybe they could test. Support is intact. This support. POC is still there. You see this POC can control everything. Look at the QQQ. So I'm expecting a bounce because over here zero weakness. So maybe somewhere here is gonna go and go higher. That's what I'm expecting. Look at the trend line breaking. Yep, look at that. Market want to go. They are bullish. MACD curling, and now bull's gonna take over a little bit and gonna go higher. The bears are giving up. POC is right there, filling up the gas. Ticks are negative. I expect something gonna happen here. MACD just filled up beautiful. Look at that. Is now over here is we need to figure out they're gonna bounce or not. That's what you got to see here. Despite QQQ, Apple, everything looking bearish here, these people can turn the table here. Okay, because this filling up the gas, you never know. Look at the cloud conditions. Alrighty. Head and shoulder pattern forming a little bit. There we go. Still all the EMAs are not bearish yet. And expect a bounce. Telling you, man, this is Apple is going down. MACD going to bounce and bear will be trapped. You watch. Oh yeah, okay. All right, bounce coming in, MACD trying to curl in up, and we're gonna go to the moon. Bear's gonna give up a little bit here. QQQ going, POC is going. Look at that. Boom, boom, boom. They are controlling the POC. Support is right here. There's a cloud support here too. Alright, everything trying to. Oh, POC, something is doing POC right now. Did you see that? Alright, market trying to. Yep, reversing now. QQQ bouncing, Apple could bounce, everything could bounce. I'm telling you, man. Yeah, yep. Ticks are going down a little bit. POC acting as a resistance, volume still active. How they can break this cloud, man, I doubt. This support is not even buzzing. You see, we didn't even test the support yet. And we all are hope that it's gonna do. Nah, it's just this bounce. Telling him. Here we go. MACD trying to curl in up. Okay, I'm out. 50-cent loss. I know POC is still there, let them do whatever, but I'm expecting a bounce. That then I will short somewhere, anywhere it go, when any big green candle comes. Until then, I don't want it. This is just a curling. Look at the cloud, zero weakness. Here we go, zero weakness, boom, 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 ticket to Hollywood. See that? That's what I was talking about. Yep. Now Apple going down, market bouncing, MACD curling up, and look at the cloud condition, super bullish. Right, and this is how they trap. I would have bought the call here actually. That would have been the best. Anybody bought a call here, man? That was a good, if anybody, but look at this powerful right now move market. Super powerful. Man, they want to go to the moon. QQQ got a POC. Here we go, MACD crossing up. QQQ got a POC. Head and shoulder pattern probably create here. Let's see. Look at the MACD crossing. Bulls are getting over. We're gonna go to the 423, 425, something like that. that's that. We're gonna break that. This is nice and bullish. Clouds are started giving up, so we might create a little something, I don't know, let's see. Full-fledged bulls are in control. All right, so the bear cycle is getting over, folks. Look like so far we need to see if it is a bull cycle starting or not, or it's gonna continuation of the bear, right? We need to see. That's what I need to figure it out here. Look like so far bull. Look at this light end of the tunnel coming in. You see that? That's the bull. But POC is around here, so they want to control. They don't want to go down. Bulls are ticks are going up. Yep. Head and shoulder pattern forming. POC is right there. Test the cloud and bounce. We are very close to the oscillator zero. If the MACD enter into the bear territory, then I believe, but right now still the bulls are, volumes are bullish, clouds are bullish, cloud support is strong, and POC support is strong. And so we are still ping pong near the POC. So this is another sloping resistance market trying to create. Right, now we need to see here what's gonna happen. As far as I see, bulls are in control. MACD just filled up the gas. Yep. Huge gap above here. Yeah, probably right here. Let's see. Yep, that's where we are right now. This is the gap market about to fill right here. There's a gap, folks, where we are right now. So every bulls are excited. These are the cheese. So yeah, the target is okay. So we're gonna keep that thing in mind. There's a cheese from here to here, but when they do it, that's what we need to do, find out. So every retailer looking at the gap. All right, so sloping resistance breaks, we're gonna go higher. Cloud conditions are bullish. Look at this. Bulls are in full flash control, as you can see right here. Squeeze coming in and it's bullish too. MACD about to cross and we could go higher now. This is bullish now. They could go. Clouds are bullish. Now MACD hugging and kissing, playing the games around here. I don't think so anything here. Later on we need to see. Chasing the cheese. Yeah, man, you never know. They can trap all the bulls and play the games. We do not know, man. These are champion market makers. I mean, they don't play dirty games. Conditions are solid bullish on a cloud. We need, if you want to be bearish, we need the trend to leave the station, this area. Then I believe until then it's just a ping pong because of the POC. You see this POC is right there. POC doesn't want to go down. They manage the price. So the only good part is, you see this, we just had a rejection from lower low, so look like they might take this off, but look at the cloud condition here. Now the clouds are giving up, so still we need still some time we need to give, still some time. So look like agenda is downward, but all right, baby want to roll now. Lower low, you see this, but the EMAs are still bullish, so expect a bounce somewhere here. So I don't know, we'll see where bounce. Is still in the middle of the cloud. This is where I think they could go and test and bounce. That's your area, what I can think of it. Here we go. Clouds are giving up. Yeah, clouds are giving up. And this could be this is the area where you need to watch. All right, look at that. So their empty pockets are tons empty pocket, and we're gonna have a flush. All the bulls are trapped, and this gonna go all the way today, and then go and test this, right? Yeah. Nice. So bears are in full flash count. There's empty pocket, tons of empty pocket. Apply your class, folks. VWAP is the target. Somewhere here, VWAP easy. Remember, they want to make sure all these bulls get trapped, right? So people are looking at the cheese, right? Remember I said cheese? This is the cheese they're doing. Exactly. Because most of the trader, they like the gap. They always look at the gap and they want to go. They buy and they look like, oh look, market looking bullish, right? And that's why they want to make the market looking bullish, because there's a cheese. They lay out the cheese. That's why they want to attract, right? You know how you trap the mouse, right? You need to lay the cheese. Then mouse goes. Otherwise, mouse doesn't know there is a cheese there. That's why there is a gap. They're going. And everything, all the technical also looks bullish. Remember, technical, they want to make sure the trader get attracted. They create a bull flag, they create a solid cloud. They look everything in favorable bullish. Okay, so there is a bounce coming in. We're gonna go and test here. Man, market got a weakness right away. Look at the tick supplies, man. This, I think there is a man, they want to go right away. I thought at least they're gonna bounce. Test this. And they got a weakness. Man, market has a weakness. Man, we're gonna we're gonna break the, we're gonna go and test the VWAP. Yeah, that's what it's all about. Okay. This is a major sloping support here, folks. Okay, major sloping support here. All right, Apple bouncing from the VWAP. Eventually they could go to 419.50 area, 419.50. How long will it take? Give some time. This is where they will be going. There will be battle here, because remember, there are some bulls here, right? They are holding hope, and this is the support. So we might bounce here, go here, and then go down something. So let's see. Still bulls, no squeeze at all. You see, there's no squeeze, nothing. Excuse me. MACD in bear territory. We are testing the support right now here. This is the support. This is supposed to bounce. The ticks are going up, filling up the gas. Continuously we filling up the gas, right? Look at the ticks. You watch, we're gonna break the VWAP, apply your tick class here, and you watch. Gonna go and test the VWAP. Right there. Still holding the puts. It go and test here. I know this is support area too, but that's empty pocket. Remember that. So we're gonna go. Here we go. Sorry. Alright, so QQQ also heading to test the VWAP. SPY is also near the VWAP. Remember that, folks. So, and ticks are continuously filling up the gas to break the VWAP look like. So you're gonna go to the paint a little bit. Let's see how much it has a bounce, because this is a major support area, folks. Okay, you see this? So there is a something drama will go through here. Critical stage. There will be a bounce, game, these, and then kaboom. Ticks are filling up the gas. We are the critical junction here, okay? Critical junction. Sloping support, VWAPs, and the demand, right? So they need a power. That's what ticks are filling up the gas. Hopefully, gonna go a little bit. QQQ got a support. VWAP. Everywhere here is a support. Okay. Right there, boom, ticket to Hollywood. Right there, yep, right here. We have tested right there. See that? That's how we would test the VWAP. And bounce. Little bounce. Look at the ticks, tons of room to break if they want to break. There's a bounce. There we go. Critical support area everywhere, okay? So keep that thing in mind. Critical support everywhere. Profit booking is important. MACD curling up a little bit. Yep. Right, bounce coming in. MACD curling. Alright, so market tested the VWAP. Now you have a bounce. All right. Right, ticks up hitting up the gas. We're gonna battle here now. Why? Because this is major sloping support. As I said here, this area we're gonna have a battle. So all these bears are trapped. Bears are getting excited, so we might give a treatment here. We're gonna go and play around here. Maybe supply right here. This is what they could go and test before. Charles Schwab to lay off 2,154 employee. MACD curling up right there. MACD curling up. You see that? No squeeze, nothing. It's a bull cycle now. So the bears are excited. Ticks are filling up the gas. Look at that. Market going up. We should go here a little bit. Okay. Cloud is a resistance, so maybe little bit. And then we're gonna go. You're gonna break the VWAP and go to the you watch, I'm gonna have fun. Yeah, I'm only playing one contract, folks, okay, just the one contract, but just having fun, enjoying. Here we go. Bye bye VWAP. Here we go. Bye bye VWAP. Look at the ticks are wonderful. Cloud resistance, rejection, supply demand class applies. We are right here at the demand, but we are testing. That's just supply now because we are underneath. So we are battling because sloping support, VWAP, cloud, like you just name it, everything is there, right? So this is. But and QQQ has a VWAP here too, so let's see how they manage here, man. I think one shot and bye bye VWAP. One shot and bye bye VWAP. See this? We just broke the sloping support, kind of, right there, this area, right there. So now low supply demand right there, apply, look at that. How do I know we were gonna break? Let's go. It's gonna be big red candle. Big red candle. And let's see if it is. We need that power. We right now MACD hugging, kissing, nothing here, folks. Okay, watch out. Oh boy, we have nothing here. This is not good. This is not good. I don't like it, folks. I don't like it. Market could create a bounce here. Yeah, there is nothing here, man. This could bounce, create a bullish diversion. That's what market look like. Wow. Let's see, folks. I need a squeeze. Oh yeah, a squeeze coming. Okay, look like we need a separate the signal line. We need something to happen. Okay, when the VWAP breaks, the signal line will be separated. Come on, come on, let's do it. Let's do it. Ticket to Hollywood, baby, gonna roll. All right, squeeze coming in. Come on, man, let's do it. Finish the line. Critical stage, Apple, QQQ, everything is at the critical stage. SPY, everything at the critical. But the ticks are trying to still supporting. Look at that QQQ. And this is interesting. Look at the MACD crossing, folks. Watch out, MACD crossing. MACD is crossing. All right, market want to go up. Told you, market want to go up. Okay, I took the profit. Man, it's only $60 profit. I wish I would have booked the profit early, man, when this was. Okay, that's okay, no big deal. It's just the one contract I'm playing. Now maybe ticks filling up the gas to break the VWAP also, okay, folks? So keep that thing in mind. For me, just you know, they want to break the VWAP, they need a power. So they need a power, then the ticks got to fill up the gas, and then they're gonna break the few, you know, things. So look at that. Look at that. When we're gonna roll here, long support to break. From here to here, you see this shorted from here to here. Got a $80, $60 from. See that? Yeah. All right, baby, want to roll. Squeeze is continuation. Apple is getting below the VWAP now. Soon we're gonna go below the VWAP. All the EMAs are lining up now. right? That's the bounce. Because of the MACD curling, folks, I might go and test because all these bears are excited, right? So they got to give a little treatment to bear. So give a little bounce, test this next supply, which is cloud right here. Maybe gonna give a little time, something like that. Look at that. Cloud conditions are super bearish right there, but MACD bullish, light end of the tunnel coming in. Market will go lower, but we gotta give a little time. We need to see how far it has a room. All right, meantime, let's click the like button, folks. Let's make it 250. We need 25 more likes. We have 700 people here. See, folks, if you guys can do that. We need a few more likes. All right, so basically what market is doing is right now ticks our filling of the gas. We got to give a little time. Eventually we're gonna break the VWAP. But right now bulls are just like how we were here bullish, right? And then bear were coming in middle to fill up the gas. Similar like that we are doing right now. Bears are in control, but bullish cycle going on a little bit. Alrighty. Yep, baby want to roll right away. I think they don't want to wait. Yeah. Man, I thought they're gonna. Man, this is gonna. I thought at least they could go here. Somewhere they should go. This is the real one, folks. Okay, this is not the one. Let's see. Still bull continue. Bulls are MACD filling up the gas. How far did we fill up? Let's see. Apple bouncing, yes. They're using Apple as a volume button. And then this is bear flag creating, look at that. Probably right here. Let's see what happens here. Maybe another one leg like this. Boom, and then rejection. Still waiting. But market creating already like this. Let's see. MACD filling up the gas. Let's see how far it fills up. That's what I say. The supply is all the way here. I doubt they could get there. Market got tons of weakness. See that? Immediately they want to go lower. Now the table going to turn. Table going to turn. Look at that. They using Apple as a volume button. Might test the somewhere here. Then I like to something, right here. Okay, right there. Right there. Yep. You see this sloping resistance. Let's see. But cloud, sloping resistance, and supply, everything is right there. So they're gonna go that far. Cloud is here. Oh man, there should be a rejection coming in here. Okay, I bought a put limit order, folks. One contract. Okay, I'm not going anything, not interested, nothing. We're gonna wait for it. One contract right now. Still bulls are in control. Okay, bulls are in control. We have, maybe they could go test these supplies all the way up here. Yes, it's possible. I invested $400 only. All right, look at that. I thought they will get a rejection at the cloud, but maybe they're gonna try the sloping resistance, or maybe cloud, maybe supply. Let's see. MACD is still bullish. Yep, it is bullish. All right, ready. Lower low, lower high, lower low, lower high, something like that. We're going. All right. When the red candle comes, it's gonna be a kaboom, big one. And this is your trend line to watch. Once we break that, then only. Until then, it's just the. So they were giving the treatment to all the bulls, all the bears. Still too early. We remember the MACD didn't cross yet, right? So we gotta. Still is bullish. It's just the. We are not out of the wood yet, but Apple is slightly giving lower low. Just started QQQ also. We'll see. Let's see. Still too early. Okay, rejection coming in, folks. Look like. Bulls are giving up. Bulls are giving up. Let's see. Man, can you believe they're charging tons of premium and market is moving like a snail? See that? Green, red, green, red, green, red, snail. So all these bears are right now burning their premium. That's what they're doing. Yeah, now we got a cloud resistance and we're gonna have kaboom. Let's see that, because the sloping resistance, Apple, QQQ, everything is started going a little bit. Yeah, here we go. Look at that. Boom, boom, boom. Ticket to Hollywood. Right there. This is what I like, man. When they do this, we can print money. But this time we're gonna break the VWAP. That's what I'm interested. See that, folks? 25-minute patience pays Let's see. Alrighty, this is your bear flag in play. Bear flag in play. Oh, look at that, man. Squeeze continuation. Still the bears are not in control, okay folks? Not yet. Squeeze continues. Bulls are giving up a lot. Let's see. MACD still bullish. MACD still bullish. Yep, squeeze coming in. Do you see that? Wow. No bears. No bears. Look at that. This is supply right there at the top. Man, all the EMAs are jumbled up now, look like a rope. Apple is breaking up, POC. MACD in a bull territory. Look at the bull. MACD already entered into bull territory. They want to make sure all the bear gets squeezed here. Oh wow, volume coming in, folks. Watch out on the bear side, man. This is volume coming in, the bullish one. That is not good. Okay, let's see. Bulls wants to take over. Apple breaking up. Look at that Apple. And QQQ bouncing here too. And look at here. You see this? Volume coming in. Man, this is look like they want to break up. And that's how all these bear gonna get squeezed to break, because they need to break the sloping resistance. So people think, oh man, market going up. Exactly, because this light coming, this is bullish. And this could break. We could go to POC or maybe resistance supply here. Supply is here. Okay, let's see somewhere. I don't know. Let's see. Now this is bullish. Supply is here. We should have a rejection here then. So they might break out. Everybody think, oh, look at sloping resistance broke. Let's see. We are still in the middle of the cloud. Anything can happen in the middle of the cloud. It could be deceptive. It could be anything. But Apple is, look at the Apple HOD almost. QQQ heading to POC too. Yep, everything. Tesla is bouncing 200. Yep. Right here. Your supply. Sloping resistance, lower low, lower high, lower low, lower high. Somewhere here we are going right here. And then look at the volume coming in. Bulls are getting control over MACD in a bull territory. Yes, resistance is here. We're in the middle of the cloud. So if these breaks, we're gonna go higher. Until then, let's see. Right now the bulls has a control. Why here? Right here, look at the squeeze. Bulls are in taking over, taking control. Bulls, the continuation. Resistance is here. That's your supply. This is what the most of the traders are looking at it, and they're gonna break this, and then everybody gets squeezed, and then they're gonna have a test here somewhere, supply, and then do kaboom. We are still in the middle of the cloud. This is just the laying out. In call already and up. Oh, good. Your SPY chart. What is SPY chart? Sloping resistance right there. Now we are in the middle of the cloud dirty game. Still has a bullishness. Takes filling up the gas. We could go higher. When they want to go and test the VWAP, they will take a 3 minutes to go. They will take a 1 hour to go like this. Right? But let's see if it is happening. We need to find out. Can be hopeful. All right, MACD giving up now. All right, something is brewing, folks. This is the trend line to watch. If that breaks, baby gonna roll. Ticks are going. All right, so let's see here. Still the bulls are in control, folks. Okay. Yeah. Yeah. Still bulls are in control. All right, trend line trying to break. Squeeze coming. The ticks. All right, so let's see what happens here. Look like now they're giving up. See this? Yep, MACD crossing. Baby want to roll now. Baby want to roll now. MACD crossing. All right, so sloping support is intact. Sloping support is intact. Yeah. All right, so just keep that thing in mind. Here we go. How do we know baby gonna roll? This is how we know baby gonna roll and break the VWAP. And then gonna do kaboom, 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 ka-ching, ka-ching. Right? Look at that trend line is breaking. I'm excited right now to go and do a man crazy short like sizing, but it's okay, man. I'm gonna do later. But how do I know that? This is picture perfect. I would have shot. Why MACD cross here? Look at that, and look at the light coming in, man. It's all right. Target is VWAP. Remember, that's the battle zone right there. Look, hey Josh, I want to say that I appreciate the incredible value that you share on this channel. I'm here every day. Please hit the like button, everyone. Oh yeah, thank you for your $10. Yeah, no, please, folks. Look, somebody. There are so many good people. Like button is right there under the, not the love button. Like button on here, folks. Please, thumbs up button, right on YouTube. If you could do that, look, ticks are filling up the gas. We're gonna break the VWAP right there. I would have got 100 contract here, but nope. Remember, we need to learn the emotion, right? When you decide discipline, that's how it's supposed to be, right? Market, we all need a discipline, man. If you learn discipline, man, you can beat the market. You can beat the Ronaldo, but you need a discipline. It's not just the pure technical, you need a discipline. All right, so this is the battle zone. Remember, it's a battle zone here too. Apple at the VWAP, POC, and the cluster zone too. Yeah, there is a bounce here, man. It's all right. Yeah, let's make it, folks. Let's make it 300 likes at least, right? Look at the people who are doing this. Let's do that, folks. Help it. We have, how many people are here? 600 people, right? Let's get the like done. Look, let's finish. Look, people are only clicking 1 or 2 people. This is support here. So market creating the, yeah, man, look at this. MACD cross, squeeze bearish, and market finding the support around here. Look at the EML lining up, man. This baby gonna roll. That will be great. 15 more likes needed. 15 more likes needed. So sloping resistance was right there. That's the rejection, and now everybody looking at the VWAP, right? And market maker giving a little bounce. Well, the bears are in control right now, so we need to see what happens here. Most likely still bearish. Look at that. MACD entering into bear territory. Volumes are building in. Look at that. Boom, boom, boom. EMAs are lined up. All the EMAs are bearish right here now, right now. Look at that. Boom, boom, boom. Right there. But man, these people are now not flushing. We should have a royal flush. But the problem is, royal flush is, we will take the VWAP this time. That's what I'm thinking. The setup is there. Apply your tick class 2 here, right there. All right, so this is your cluster zone, folks. Right there, we are battling right here. Okay, Apple is about to leave the POC. If that leaves, so still there are some orders sitting here at the bulls and bear right here. We need that rejection. That's why tick has a room. They can do anything right now. Still we're in the middle of the cloud. We need to give a little wait. EMAs are lining up. Let's see. Look at the bulls are in full flash. Look at that. Interesting, man. This is so everybody waiting at the VWAP and they bounce. Yeah. So the ticks are filling up the gas. Let's see if that is the case. Did I turn off the comment? No. Did he turn off the comment on YouTube? No, I did not. These people are typing right here. I can read it. In read it. Look at that. This is how they break the VWAP. MACD, look at that. Boom, boom, boom. Ticket to Hollywood. But man, these people are taking too long. So did you understood what market maker did, folks? Right? There was a VWAP support here, right? And then we bounce and we spend 45 minutes burn out everybody's premium, right? That's what they did here. Their agenda, okay, we need to understand. We need to take the market maker hat, wear the market maker hat and think what they do there. Look at that VWAP, boom, 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 ticket to Hollywood, look at that, going, getting excited. No, here we go. This is how they do it. But they do it at their leisure. Look at that. It's taking 1 minute to break the VWAP. They want to do it in not this 45-minute span. They want to do it in whenever they want. And this is how we know. Look at that. Ticks up, squeeze built in, bears are in control and about to break the VWAP. This is how we know. Boom, boom, boom. Ticket to Hollywood. We broke these empty pockets. We are heading target somewhere here. And that's how we know. Market broke the VWAP. Absolutely broke the VWAP. And right there. Yeah, that's the a lot of market doesn't want to go right like that easily. EMAs are lining up. Market testing second time VWAP bounce, sloping resistance is right there. EMAs are still bearish, cloud is right there. MACD in a bear territory. Something too interesting to see here. Bulls and bears are giving up. Look at the conditions. takes filling up the gas. Here we go. Now look at the big flush, right? These conditions are not the best, folks, okay? Market keep testing the VWAP. EMAs are super bearish, but and the volumes are bears are in control, but they keep VWAP is in check. QQQ is building the sloping support. What are we are below the VWAP? Ticks are still little down. MACD better, the volumes are there. Doesn't have a match. Doesn't have anything. These people are nothing. Still bulls. Look at the condition of the cloud. Green, red, green, red. Right. MACD looking bearish. Volumes are there. We just need a nice good flush. Come on, let's do it. Right there, boom, boom, boom. Ticket to Hollywood. Okay. Bounce coming in here or what? MACD looking bearish. Volumes are lining up. They want to supposed to go there, right there. Look at that. They're supposed to go. Man, but the premiums are you're not gaining anything here, folks. Can you believe it? This no money. small bucks. Alright, there's a bounce coming in. Yep. We're gonna go and test the VWAP. Alright, so this is your support right there somewhere here. Ticks are going little up. Price compression here. QQQ broke the sloping support and heading to VWAP test right there. Right there. All right, take the money and run probably here, folks. Okay, I'm out. Alrighty, $1.50, $150 profit. But battle, battle, battle. It's too much battle to go through all the pain, right? Ticks are going up. Alright, market trying to bounce. There's a support area a little bit. Ticks are going up. Market want to go up. Alright, watch out, folks. This is support area. Now let's see the ticks going up. Maybe they're gonna break this and go lower. That's what it appears to me. Yeah, it looks like they want to go right there. Can't do anything. Look at the ticks are going up. Market is right there. We are testing. QQQ is testing the VWAP. Market trying to bounce, folks. Okay, just telling you right now. Here we go. Okay. Maybe they're gonna go and test the VWAP now. We cannot look for another. If they go and test the VWAP, I would love to short maybe one contract again. Let's see. All right, now just gonna relax, folks. I think we need to wait here, see what market maker gonna do. There is no money here, folks. You have to understand the option class applies. Why? You can't just simply if the iron is not hot, you gotta apply so many things. Taking trade. You're riding on a bicycle and you want to go to 100 miles an hour. Can you go? It's like that. Yeah.
I mean, I don't understand why they have been high premium today, but that's not at all good.
Whoa. Could you repeat again? What's the question?
No, they're charging high premiums today,
Yes.
and the movement is not big in the market.
Yeah. At 2 o'clock, you will see they're supposed to move, but
Yeah.
they want to see how many people are coming in and out. They also wanted to see how many people are coming in, all the calls and bulls, the bulls and bears. Mm, so, so in the morning they loaded up all the bulls. Now they're loading up the bears, all right, and then come in the middle, then figure out. But mostly people don't lose money on before FOMC starts, like before 2 o'clock. Why? Because the IV goes up, right? And that's the reason the theta decay might even it out. That's why nothing much to lose, particularly, you know. But point here is just not to trade, you know.
Yeah.
Yeah.
Yeah. Thank you.
Mm. So 200 SMA to be precise, I'll tell you right now, folks, is right at 423.62. Okay, so 424 area, just keep it in mind. 423.62. So if anybody's asking me, all right. So just in case those who are bullish or bearish, whatever would be, I'll bring it in if you want to see. This is a 200 SMA, it's 423.62. Okay, and that's your supply, same area. That's your supply. So market might bounce. I'm expecting, because market is super oversold, right? So today if they bounce, they can trap all the bulls, right? 1, 2, 3, 4 days bulls. They trap today all the bulls in FOMC, and market will celebrate. Oh, we broke the 200 SMA, blah blah blah. Then everybody become bullish, and then kaboom, something you can do, and then they go. You never know. This is thesis. I'm not gonna trade based on thesis. I'm gonna wait. Okay. Oh, Phantom print coming 436. Woohoo! Wow, they want to go today to the moon. They're gonna break. They're gonna go like this. Huh? Where? Because normally they move $10, folks, okay? Easily. I have seen $15, $18 they moved on FOMC. So if that is the case, man, this is computer. How far they could go? Man, this is 30 minutes. Let me bring 30 minutes. Sorry, because I open another chart. Okay, just bear with me. Alrighty. So the more the down they go, better for them to go down and then take a U-turn. So the bear could be trapped. Right. So they are doing it right now. I feel like they could go. Look at the condition of the cloud now, bearish. market want to go lower low now, folks. Okay, look at that supply rejection, VWAP, boom. So the MACD right here trying to bounce, but I would give it time, folks. Okay, let me chillax a little bit. Let's click the like button. Let's click the like button, folks. How many likes we got? 309. We don't want to bother anybody after once the FOMC starts. 700 people here. Anybody new here in the community? First time? How did you hear about us, folks? If anybody new here, let me know. Is this the demand zone? No, this is not. Right here was on the VWAP. We got a rejection and we're testing. So market is finding support a little bit here. Previous rejection bounce. Then again we're creating a support now. You see this? Sloping. So if that is the case, they are finding the support, but we need to break the previous high to then only. Until then is still bearish. So we need to wait. Alrighty. Apple, yeah, look at the weakness, lower low. So still has a weakness. Squeeze continues. Bears are in control. Ticks are still negative. All right, we need 25 likes to make it 350. So MACD filling up the gas. Why they reverse here? You see this reversal from here? Why they reverse here? So still the bears are in control. Just teasing all the bulls. Apple is holding the price good up there. Look at the Google squeezing on the POC. Give a little time. Roller coaster says I'm new. Oh, okay. How did you find about us? Apple up 60%. Yeah. South said I'm relatively new. Been watching you for the past couple of weeks. Just searching trading live on YouTube and clicked. Loved your commentary. So stayed. Okay, cool. Thank you, man. I appreciate it. Anybody here who used any other platform was using during the full day? Any other community or using live stream somewhere on YouTube or anywhere? Anybody here in last who is new here? You know what I mean? Those who knew, like, in your experience. I'm sure there's a lot of platforms. Look at the Apple is bullish. So this is trend turning little bullish here. Okay, we test the VWAP previous high we go, then we're gonna break this sloping resistance and we could break. So we need to wait for the VWAP. If VWAP breaks, market wanna go higher. Until then it's still bearish. So we need to find out, see what's happened. I don't want to go into any trade. Josh, your account to follow you, man. My accountant is 80-year-old. He doesn't care. Somebody says this English. Alrighty. VWAP is right there. We are still ping pong in between sloping resistance and sloping support. Anything one of the things breaks, then we can change the direction. Okay, and right now MACD bullish, so maybe filling up the gas. So let's see what happens how far right now. Okay, give me a break. I'll be right back. Use the bathroom. Give me 5 minutes. All right, look at that, man. These people are agenda is to go lower low right there. So we are going back to the same where we were opened up today morning right there. Look at that right there. Do you notice, right, that every time market goes down, goes up, goes down, right? The moment it goes down, you try to go up. Why? Because many people, they don't book the profit. They don't book the profit, or you can just hit the market order, right? And it's a green candle. You still lose some value. Right, that's right. Alrighty. Sold for the nice profit. Yeah, good job, folks. This is the support crack, quite a bit strong support. Okay, plan it out now accordingly. Right? But there's a gap here. So what I'm thinking is this: market has a gap here, right? This is the gap. So what they will do is they're gonna break this, test. Wait, hold on, let me see. I don't know, man. They could come here at the low of the day right here. It is here, somewhere or here, right? Come down. Everybody think market gonna go and fill up the gap. Right here is the gap, right? And they could trap all the bears and come back to the middle. So bulls are already getting guacamole, and then bears start getting guacamole, right? And that's how they give them the treatment. So bulls and bear both. So still there is a room for the bear, but plan accordingly, folks. Okay, whatever I lay out, man. But exactly this is what I laid out yesterday. Yesterday, that they could do this, man. This is that they trap the bear, and then go to the moon. Well, still too early, folks. Okay, not to get excited. Nothing. Let them do play whatever. I don't want to be part of this ugly game. To make a $1, man, is a painful job right now. You cannot imagine how much painful it is. Right? You all know. Rate hike? No, folks. I don't think so. They're gonna announce the rate hike this time. Support is right here. Continuation. So lower low, lower high, lower low, lower high. You want to wait. Still support is intact. Downward channel created. So let's see what the agenda would be from here onwards. Whenever this channel breaks upward, folks, that's the time market could fly. But right now is 1 o'clock. We have 1 more hours to go. Okay. Market could go and test the VWAP probably. Let's see. There are a bunch of layers here to watch now. Still compression. Now light end of the tunnel coming in. Sloping resistance in tech clouds are still bearish. Well, folks, we need 15 more likes to make it 350. 15 more likes needed. So the downward channel is intact still, and we are in the middle. They're trying to keep the price of those who are bulls here and bears here, both are right now in a mode where still we have 1 o'clock, so still time to go. So market is doing lower high right now. Remember that, folks. Market is keep doing lower high, not higher high. All right, let the market decide. Still all the EMAs are bearish. Now remember, this is the cluster zone, folks, or this area is a cluster zone. Not going to be easy for the short side and all right here. There's a supply rejection, but we need to wait here where it could bounce. It's gonna go. This is the demand area here. Yep. Trying to preserve the energy for the FOMC. Let's see. Bears are getting heavier now, but this is support here. As long as the trend line is intact, trend is your friend. Continuation. We got to wait for this channel to break downwards or upwards, whatever, you know. That's what we need to wait. MACD trying to cross, and look at the cloud condition, bearish. We want to go lower low, look like that's the battle zone. Yep, they want to go. Take a look at what exactly look like. Google is in compression. Microsoft is also little bearish. NVDA is also. Right now, market is little selling now, folks. Okay, that's why. AMD holding good. Look at 106 AMD. Meta holding good. Meta, AMD. The cyclical stocks. Cyclicals are not doing good, but they could buy cyclical a lot. Okay, market trying to create now support here. Let's see. Market finding the support here, creating higher high right there. Now channel could break, folks. Okay, let's keep it in. Channel can break and VWAP is right there nearby. Yep, right there. Channel, look at that channel. Keep that thing in mind because this is higher high. Maybe you want to go to the moon. Okay, I'm in a one contract call. Just the one. Okay, I'm still, because you have strong supply at, just probably they could break the VWAP right here and come back something. I don't know, we'll see. I'm trying to make a few cents or maybe $1. And the cloud conditions, I look at that applies too. Alright, squeeze coming in, bulls on a little control here, but we need to break the cloud to be bullish. Until then, sloping resistance is still, this channel is intact, trying to break, but give a little more power we need. I think market gonna compress here, and then 2 o'clock something gonna do later. Let's see. Look at the volume just came in. Look at that. How many of you think that market is bottom here right now? How many of you think market is bottom here? Not just guesswork. Sloping support right here. During the FOMC, probably market will swing. Most likely, they could do swing also, folks. Okay, nobody knows. From here to here, you could make it 50, 60 cents. 50, $60. Yeah, exactly. Nothing much. But there. VWAP is a rejection. You're gonna break the VWAP and supply right there. And that's the rejection come. Per 14. Right there. Okay, I'm out. 60 cents I made. $60. Okay, market wanna go. Look at the channel breakout, beautiful, right? But that's your supply area too, man. But right now market is solid bullish. Ticks are these. Yeah, so they could go around this right here. Okay, anyway, let them do whatever they want to do. Apple is on a breakout continuously. Apple is bullish today. Apple, all the mega cap today. Which contract I bought? I bought it 4235. 4235. Only one contract, folks. Okay. And you guys are like, I know there's supply right there. Right here. 4235 call. $4.90, 550. Target the supply from here to here. Channel breakout from here to here. Well, market trying to break the cloud, and let's see whatever they do. going early, predicting FOMCs and all, folks, just to let you know, be careful, okay? Just to let you know. That's not what I teach. The rest is all up to you. So your call is yours. So apply your path to success class, what we learn in how to trade FOMC. You got to recall FOMC path to success class. That's how we print all the FOMC, right? Those who are in the class, those who traded, those who learn, use that method. Going early, those who are listening here, going early is the wrong way to do. You could you might, make a tons of money too going early, but then that money you're gonna give it back to market maker some another time. That's why you need a confirmation, particularly when we do size. There are different levels of event to trade, right? And there are different technique applies to every event, right? And that's because cannot apply the same technique on every event.
Josh,
Yeah, what's up, man?
do you know like the social sentiment if retail is bullish or bearish on what's coming up?
Most likely bullish. Why? Because market is oversold, and they will also make.
Okay.
So what I think is they will also, because phantom print is also coming in bullish, and I think oversold, so they might buy, right? And they will break the 200 SMA. I think I made the market video update. I don't know you saw that, and so that thing. What I think is probably they're gonna go and break the 200 SMA. Today they could break 200 SMA, but am I gonna take the trade right now? No. Just like we need to wait for wait for certain areas, see what they're gonna do when the market event start. It could be a bullish in the when the event start. It could be bearish event starts, right? But we need to see how they play. How they're gonna create a trap. Remember, they create a trap, right? So we need to find out. I need to see, just like how. So for example, today market has several traps. So they call it, in a professional language, they call it, we are providing liquidity for the bulls and bear, right? Bulls and bears. So these are the bulls and bears, right? Point here is we don't want to be part of the trap. We want to use the trap to make money, whatever they do. So that's why what I teach is we need to wait for it, right? And find out the setup. And that's how I trade to make money. So small I wouldn't mind playing coins and all, right? And then I go with the sizing if something helps.
They're usually wrong, so that's why I'm asking.
They're usually wrong. I don't know, man. Okay. I mean, if you look at the daily chart, man, market is super duper bearish. So what I'm thinking is maybe we might have one more rejection somewhere. So today the FOMC day, they're gonna buy back all these whatever they shorted, right? And use the FOMC event, and everybody will be bullish. Market, everybody will be bullish and pull back and create a higher high, and then bounce. So maybe it's a process of 2 weeks, 3 weeks. 2-3 weeks is here. I can see market from here. You see this, not these. This is the major supply we would have, 435, and the second major supply is right here, which is 425, yeah, which we could do today. Guesswork. Okay, we don't know. Let's see. But market conditions are super horrible on a daily chart. But there's always cycles, right? So we need to see if this cycle, how much it brings. This is daily chart. See, look at my exit right at the top, and I announced there's a supply there, folks, and they're gonna break the VWAP, right? What did I say? They're gonna break the VWAP and market go up, and I will I took my money, and look at the rejection. See how precisely I traded here. Okay, not trying to brag, but understand, folks, this is it's all about understanding, learning things. Look at that flush. So people who think, oh, market going to the moon, they're gonna do this, so you buy the call and then they burn out all the calls, and they keep going lower low right here. They got the power. Now sloping support breaks, we could go and short. We're in the middle of the cloud, they want to go lower. Look at that. So sloping support, middle of the cloud, bull territory. Ticks up, going lower low. Apple is still bullish. So all the bulls got a treatment. You're still in a bull territory. I bought a put, small one contract, trying to make a few cents, 50 cents, 60 cents if I could get. Most likely they could go and test the low. Let's see if that happens. Alright, so all the bulls are trapped here, 1, 2 cycles, and the support is around this. This is a cluster area too again. So somewhere here.
Still haven't made a single trade yet, Josh.
Good, man, look at that discipline, man. I tell you, man, you're a champion. I love. But
Everything is just jacked up. I don't want to do it.
yeah, nothing. There's no money there. I traded like 5-6 times today, but the monies are not there. You lose $100, you make $50, you lose $80, and then so basically you didn't go anywhere. You burn in your ammunition. But I'm just, for me it's okay. I can still recover whatever. But I'm okay. Not bad.
Man, you're a champion, Josh.
Taking one contract, man. Nothing. Just whenever I do something, I'm learning. Every day I learn, man. Every day, and I like it. Look at the here. So then all these bears are trapped. So support breaks, and then we break this, then they're gonna get squeezed here. When we break the lower, this low market takes this off, then they get squeezed because they're expecting a bounce here. You see, they're expecting this demand zone, right? So they're expecting a bounce, but when they break this, then they got paranoid, right? All these bulls. That's why market gonna go lower. Look at the volume here. Exactly.
New lower low almost, Josh.
Mm-hmm. Right there. Sorry, not this one. Right there. All right. Here we go. Ticket to Hollywood. Look at the volume. Bears are in a full flash, but that's your demand area right there. That's your pre-cluster area too. That's lower low. Bears are in control. MACD curling up, folks. Watch out. We need to wait here, and this is the support area, folks. Look at this market, head and shoulder pattern forming here, right? Something like this, but we need to see how far. So market is almost 136, so we have 30 minutes to go. Somebody said, let's not forget that market maker has a habit to freeze everything. Your premium can freeze. Yeah, man, you got to apply all the indicators, technical indicator too. That machine indicator, man, that can be true. They, remember they took my $2,900, right? And then they blame on the option house. Yeah, man. Okay, market is bouncing support here, folks. Okay. Well, let me finish my lunch, man. I'm gonna exit my positions. I'm out, folks. Took a 10-cent loss. I'll be right back. Squeeze continuation. I'm back. Okay, market trying to bounce. You see supports right here, folks. Okay, I'm gonna finish my lunch, and I'll unmute myself. We have another 20 minutes. Okay, so let me finish. Still conditions are sideways, folks. Watch out on a long side and short side. EML lining up. Higher high. We might flip the supply.
Very long time.
All right, my lunch is over. I'll be right back, folks. Just give me a few minutes. 2 minutes, I'll be back. Okay, I'm back. Alrighty, so market right now conditions are sideways, folks. Still. Alrighty, so this is your resistance, today's high. Look at the market is right there where we will draw that. And this is your today's low. Alright, so the trend has to leave the station either north here or here. Until then, ping pong, ping pong. Alright, so we're gonna wait for it, let them do whatever they gotta do. We go from there. Alright, so we are still in the compression mode, folks. Okay, you have to understand the conditions. But market building the sloping support. Let's see what happens. This is support. So this is the support. This is your resistance, sloping support, and horizontal support. Still the bulls are in control right now. MACD in bull territory. Squeeze coming in. Alrighty. Alrighty, 2 o'clock about to. Let's see what happens. A lot of calls been purchased or what? Let's see SPY. Okay, market about 2 o'clock. Boom, boom, boom. Ticket to Hollywood. Train leaving the station. Okay, I bought a call. Target is somewhere here. Remember, these people are smarter, man. They're gonna. I'm trading small right now. Okay, just to give you an idea. I don't want to go anything crazy. Well, they're gonna go up and they're gonna go down. All right, market is bleeding big time. Ticks are going down, and we could go lower and lower probably. All right. MACD still in bull territory. I only bought a one contract, folks, okay? Right now, one contract. All right. Trend left the station, coming back. Bulls are lining up. Yep. Rates are on. 2:30, Jerome Powell comes in, folks. Okay, so we're gonna bring it live at 2:30. Until then, we're gonna see what happened here. Bulls are lining up. If they go lower, that is better for them. That's what I'm thinking. So they might go here somewhere. I'm thinking if they do it, man, and then reverse it and go to the moon and trap all the bears. Something like they could do if they do it. Let's see. Right now they are like bullish. Going early is not a good idea. Remember, folks, I keep repeating again. That's why I play coin and let the market decide. Okay, because they will make you look like bullish, they'll make you look like bearish, and then they change the direction. That's why. Because we are, look at that territory. This is a cluster area right there. Tons of time we spend in this. Right. Or a more hike in future, okay? More rate hike in future, okay? That's the news. Yeah. All right, you can. So what do you see right now so far? Weak about the body coming in. Still the bulls are in control. MACD crossing. Most likely we're gonna go and test here. When Jerome Powell comes in, folks, I'll bring in him here, okay? Until then, we're just gonna watch this chart. All right. All right. Meantime, folks, if you can click the like button, we need 30 more likes to make it 400. 30 more, folks. Perfect time. We needed the likes. All right. If you guys can do that, that would be a great. Let's do it. All right. So still, busy cluster zone. Bulls are in control. Still the calls and puts.
Are you gonna trade, Josh?
Not really, just the one contract because I'm testing the water right now. I want to make sure what they're doing. So just consider not. I want to make sure I need some sort of things. All right, so wait for folks. We need to make sure what market does here. A lot of weak about the body. Support is
What does the order flow look like?
What's that? Order flow? Order flow look at that. This bullish showing a little bit. But that, we still need to wait. Let the market maker create a trap. I want to see the trap. All right, this is not a trap here. They will create a trap, and I want to see that trap. I like when they create a trap, and then I go figure it out. So I'm gonna wait for the trap. All right, folks, we need 9 more likes. MACD still compressing at the bull territory. The bears are a little pushing it down. Right. Bulls are giving up. Right there. Alright, market want to go lower. Look the bids are giving up. Trend line is breaking. Bulls are taking over. The squeeze is coming in. Trend line breaking. They want to go lower. Alright, so remember this is still sideways channel. It could look like they're gonna show you look like going lower. It could bounce also. It look like going up. It could go lower also. We are still in the same territory. The best thing is they go lower and then bounce is the best. Well, thank you, folks. We got a 405 likes. If anybody can do more, that would be great. All right, we bring in the Jerome Powell in 20 minutes. As soon as he walks in. All right, train is still parked. All right, MACD. Look at the signal line. Look at the MACD. Look at the bears in control here. Squeeze, right? And the bulls are giving up right now, and they want to go lower. Yep, right there. Alright, market trying to break the sloping support. Demand area is right here. MACD enter into bad territory. Bears are in control. But I don't want to go. So they are going to trap the bear. Let's see how far they would go. They could go lower, way lower here too. But right now support is here. Trend line is breaking. Right. MACD enter into bad territory. Yep. Bears are in super power control right now. Look at that support area. So these MACD looking horrible bearish right now. Look at that. Okay. The market want to break lower. Look at the MACD super bearish. They want to go lower. Squeeze coming in, volumes there. That's the demand area. MACD is super bearish right now. Look at the EMAs are. That's the demand. Let's see now here what happens. Okay, so many people thinking this is support, let's go buy the call, right? And this is how people do that. I don't want to do like that. Alrighty, bulls are lining up. Let's see the squeeze. Sorry. Well, look like bulls are coming in the line right now. Okay. So far conditions are not favorable. Still bears are in control despite all the green candles. Oh wow, 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 look at the POC is right there. POC is right there. Okay, POC acting as, so let's see agenda here. Let me get rid of this. Still we are at the cluster zone. Demand supply, we need one of that to break. Right now look like they want to make this still in bear territory. Market is still waiting for another 15 minutes Jerome Powell to enter. Right, still 15 minutes. So they're loading up all the bulls and bears. So they're going up, bulls are excited, going down, bears are excited, right? And that's the cluster zone, that's the POC right there. Alright, MACD trying to cross, we are still in a bear territory, POC is right there, controlling the price, VWAP is right there. So many mountains, folks, I'm telling you, going early, no good, be careful. Let the train, let the Jerome Powell speak, probably. Alright, market want to bounce now a little bit, POC is right there. Alright, market want to shoot up a little bit. Okay, bulls are coming in, MACD crossing, breaking the VWAP. Now, a lot of traders are getting excited because we are above the VWAP. Alright, but look at the basura. Alright, that's the reason. Conditions are not good, remember folks. We need Jerome Powell. Jerome Powell. Still 10 more minutes to go until Jerome Powell walks in. All right. Google HOD. They could take the Google up. Why? Because Google was dumped earlier, right? So they could take the Google up. Here we go. Squeeze coming in. Bears are giving up. Okay. Light end of the tunnel coming in. Wow, look at that. That is, we got the supply here. Okay. The bullish volume coming in now. Conditions are not great, so that's why we need to still I don't see much. Only thing is bullish cycle coming in. That's what I see, but I need a trap. I need to figure out the trap. That trap is not there yet. All right. When Jerome Powell walks in, Then you're gonna see slowly theta decay gonna burn out everybody's premium. Remember, until right now, premium is holding, right? So that's why going early no good, folks. Let the premium die out. Let the Jerome Powell do some magic. It'll be dirt cheap later. Alrighty, let me know whenever Jerome Powell shows up and I will bring the video here. Alright folks, meantime you can click the like button. We need another few more likes. Okay. Okay. Okay, we're gonna do lower low or what? That's what I want to see here. Jerome Powell about to come. All right. We need one more likes to make it 425. I'll bring the Bloomberg or CNBC. It's still not there, right?
No, he's still not there, Josh. I'm on Yahoo Finance.
Okay. No, that is delay. Yahoo Finance is delay. Last time I noticed that. I think CNBC and
Okay, he's in.
he's in. Yep, right there. I can see that. I'm gonna bring it in. What is this Bloomberg right there? Okay.
And I remain squarely focused on our dual mandate.
Just a second, folks. I'm gonna bring it here.
It's every municipal
Just a
bond
second. Just a
investor's
second.
dream.
Add.
A bright shining city on a hill where there won't be any financial problems. But what if there are? That's why Assured Guarantee protects your principal and interest payments. Assured Guarantee,
Man,
a
these
stronger
people.
bond.
We will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. The stance of policy is restrictive, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening have yet to be felt. Today, we decided to leave our
Look at that
policy
market. I want to
interest
go to
rate
the moon,
unchanged
folks.
and to continue to
Sorry.
reduce our securities holdings. Given how far we have come, along with the uncertainties and
Look at the
risks we
MACD.
face,
Look at the everything. Look
the
at that.
committee is
Look at
proceeding
that.
carefully. We will make decisions about the extent of additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a strong pace and well above earlier expectations. In the third quarter, real GDP is estimated to have risen an outsized annual rate of 4.9%, boosted by a surge in consumer spending. After picking up somewhat over the summer, activity in the housing sector has flattened out and remains well below levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 266,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.8%. Strong job creation
Nice
has
and
been
bullish right
accompanied
now.
by an increase in the supply of workers. The labor force participation rate has moved up since late last
Look at the
year,
POC right now, folks.
particularly for individuals aged 25 to 54 years. And immigration has rebounded to pre-pandemic levels. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs to workers gap has narrowed, labor demand
Apple is
still
pushing,
exceeds
the
supply
market is
of
pushing down.
available workers.
POC is pushing down.
Inflation remains well above our longer run goal of 2%. Total PCE prices rose 3.4% over the 12 months ending in September.
QQQ is on HOD,
Excluding
high
the
of the day.
volatile food and energy categories,
QQQ
core
flying
PCE
high.
prices
So
rose
market want to go high.
3.7%. Inflation has moderated since the middle of last year, and readings over the summer were quite favorable. But a few months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal.
Look at that
The process
QQQ.
of getting inflation sustainably down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in
Everything is
broad
flying above the
range of
POC,
surveys
folks.
of
Okay, so there is no control. Market
businesses,
want to go
and
higher.
forecasters, as well as measures from financial markets.
Ticks are going down.
The Fed's monetary policy actions are guided
POC
by
is
our
still
mandate
here.
to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation.
Wow.
We are highly attentive to the risks that high inflation
What's coming
poses
in
to
here?
both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised
Alright,
our
so
policy
market
rate
filling
by
up the
5.25
gas, man.
percentage
Want to
points,
go higher.
and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time,
Oh, look at
and to
that.
keeping policy restrictive until we are confident that inflation is on a path to that objective. We are attentive to recent data showing the resilience of economic growth and demand for labor. Evidence of growth persistently above potential, or that tightness in the labor market is no longer easing, could put further progress on inflation at risk and could warrant further tightening of monetary policy. Financial conditions have tightened significantly in recent months, driven by higher
I'm not in
longer-term
any
bond
position,
yields,
folks, right
among
now.
other factors.
Nothing.
Because persistent changes in financial conditions can have implications for the path of monetary policy, we monitor financial developments closely.
Kind of sounds hawkish, no, Josh?
In light of the
Yeah.
uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook and for economic activity and inflation, as well as the balance of risks. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take
I
into
think
account
POC
the
acting as a
cumulative
support.
tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below potential growth and some softening of labor market conditions.
No squeeze. Volume is
Restoring price
continuation
stability
coming
is
in.
essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country.
Wow, POC came
Everything we
down.
do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum
So we
employment
found a
and
little
price
rejection
stability
here
goals.
this side.
Thank you, and I look forward to your questions.
Howard Schneider with Reuters. Thank you, Chair Powell, for doing this. To what you referenced the rise in long-term bond yields, to what degree did that supplant action by the Fed at this meeting?
Thanks for your question. So, I'll talk about bond yields, but I want to take a second and just sort of set the broader context in which we're looking at that. So, if you look at the situation, let's look at the economy first. Inflation has been coming down, but it's still running well above our 2% target.
Oh, this is not good,
The
Judge.
labor market
This
has
is a
been
lower high.
rebalancing, but it's
Yeah, I'm
very
still
tight by
observing,
many
trying to
measures.
observe more.
GDP growth
We
has
got a
been
little
strong,
rejection, but the
although many
POC we are still
forecasters are
bullish.
forecasting
You
and
see
have
this?
been
So we
forecasting
want to
that
see
it
this
will slow.
rejection that giving treatment.
As for the committee, we are committed to achieving
I want
a
to find
stance
out any
of
bounce.
monetary policy that is sufficiently restrictive
This
to
is
bring
bullish.
inflation down to 2%.
I know it's
over
a
time.
red
And
candle,
we're not
but this is
confident yet
altogether
that we
bullish,
have
but they're
achieved
giving
such a
treatment to all
stance.
the bulls.
So that is the broader
So let's
context
see
into which
how much
the strong economy and all the things I said, that's
POC
the
acting
context in
as-
which we're looking at this question.
That's what we need. Look, this is a trap, bull
So,
trap, right? We need to see. I need to
Obviously,
figure it out.
We're monitoring a return of
more.
increase in
How-
longer-term yields, and
Is
which
this
have
really filling up the
contributed to,
gas?
a tightening of broader financial conditions since the summer. As I mentioned, persistent changes in broader financial conditions can have implications for the path of monetary policy. In this case, the tighter financial conditions we're seeing from higher long-term rates, but also from other sources like the stronger dollar and lower equity prices could matter for future rate decisions as long as two
Look at this.
conditions are satisfied. The first is that the tighter conditions would need to be persistent, and
Keep eyes on
that
POC,
is
see what
something that
POC
remains to be
does.
seen. But that's critical.
I
If
need
things
to-
are fluctuating back and forth, that's not what we're looking for. With financial conditions, we're looking for persistent changes that are material. The second thing is that the longer-term rates that have moved up, they can't simply be a reflection of expected policy moves from us. That we would then, that if we didn't follow through on them, then the rates would come back down. So and I would say on that, it does not appear.
There is a get below
that an
suggestion
expectation
for
of
you.
higher near-term
Yeah,
policy
I
rates
have
is
both
causing
the
increase
gap on the
in
top and the
long-term
bottom
rates.
right here.
So,
Yeah, right here.
In the meantime,
Gap. So we
perhaps
need
the
to
most
see.
important thing is
That's
that
why I don't want to
these
go
higher
first
treasury
this time.
yields
I
are
want to make
showing
sure.
through higher borrowing costs for households and businesses, and those higher costs
And
are
this
going to weigh
is-
on economic activity to the extent this tightening persists. And the mind's eye goes to the
When they go at the bottom here, I want to
8%,
buy.
near 8% mortgage rate. Which
Let's see,
could
whatever
have a
happens, gap
significant
also.
effect on housing.
We'll see
So
whatever
that's how I
happens.
would answer your question.
So they're trapped right now, all the bulls.
In your opening statement and just now, you
All
seem
the
to
bulls are
be
trapped and they're gonna
more
go fill up the gap down.
that financial conditions are restrictive enough to finish the fight. Is that true?
Yes, that's exactly right. To say it a different way, we haven't made any decisions about future meetings. We have not made a determination, and I will say that we're not confident at this time that we've reached such a stance. We're not confident that we haven't. We're
VWAP
not
broke,
confident
market
that we
we
have.
broke the VWAP right
And
here.
that is
And now they want to
the
push
way
it
we're
down.
going to be
Ticks are
into
going
these future
700.
meetings is to
Below the
be,
cloud.
just
And this is a
determining
demand
the
area. We
extent of
might
any
can
additional
flip this and
further
all the bear bulls are
policy,
trapped at the top.
tightening that may be appropriate
Okay,
to return
so
inflation
that's
to
the
2%
agenda
over
here.
time.
Market would have just apply that.
Hi, Chair Powell. Thank you so much for taking our questions. I wonder, if you don't raise interest rates in December, would the presumption be that at that point that we should expect that rates are at their peak, or is there a possibility of restarting rate increases next year? And are there any costs to taking a more extended pause?
All right.
So, Let me start by saying we haven't made a decision about September. You're asking.
So I bought some puts, folks. Right here, we were broke,
We're going into
and we're gonna
December
flip the
no
demand
bets.
most likely because they are trap all the bulls. Man, what happened here? Advertisement, man. Sorry. Okay, Bloomberg. Sorry, folks. I want to take the money and run, man. This is. Woohoo! Look at that. What did I say? Let them create a trap, and I'm done. All right. Sorry, folks. This is advertisement coming in.
December, we didn't talk about making a decision in December today. Really, it was a decision for this meeting and understanding broader things.
Nick Timmeros of the Wall Street Journal. Chair Powell, did the Fed staff put a recession back into the baseline forecast in the materials for today's meeting? And how much does this tightening in financial conditions substitute for rate hikes if the tightening is persistent? You had said it was worth maybe a quarter point when we had the bank failures in the spring. What is it here on something that's presumably more straightforward and more familiar to simulate?
So I guess I don't want to answer your question about the recession, but the answer is no. I think I have to answer it since we did publicly say in the minutes. You'll know anyway in the minutes. The staff did not put a recession back in. I mean, it would be hard to see how you would do that if you look at the activity we've seen recently, which is not really indicative of a recession in the near term. In terms of how to think about translation into rate hikes, I think it's just too early to be doing that. And the main reason is we just don't know how persistent this will be. You can see how volatile it is. Different kinds of news will affect the level of rates. And I think any kind of an estimate that was, precise would hang out there and have a great chance of looking wrong very quickly. So I think what we can say is that financial conditions have clearly tightened, and you can see that in the rates that consumers and households and businesses are paying now. And over time, that will have an effect. We just don't know how persistent it's going to be, and it's tough to try to translate that in a way that I'd be comfortable communicating into how many rate hikes that is.
If I could follow up, what makes you confident that tighter financial conditions will slow above trend growth when 500 basis points of rate hikes, QT, and a minor banking crisis have not thus far?
Well, that's the way our policy works is, and sometimes it works with lags, of course, which can be long and variable. But ultimately, if you raise raise interest rates, you do see those effects, and you see those effects in the economy now. You see what's happening in the housing market. You're seeing that now. You'll see if you look at surveys of people, it's not a good time, they think, to buy durable goods of various kinds because rates are so high now. I mentioned again, we're getting reports from housing that the effects of this could be quite significant. But you're right, this has been a resilient economy, and it's, I think, been surprising in its resilience, and there are a number of possible reasons why that may be. Our job is to achieve maximum employment and price stability, and so we take the economy as it comes. It has been resilient, so we take it as it is.
Colby. Thank you. Colby Smith with the Financial Times. In terms of the thresholds that you've laid out of what could warrant further tightening, the additional evidence of persistently above trend growth or some kind of reversal in the recent easing of labor market tightness, that seems to suggest something more powerful than just one more quarter point rate hike would be necessary. And I'm just curious if that's how the committee sees it.
So we've identified those factors, and those are not meant to be the only factors or a specific test that we're going to be applying with some metrics behind it. Really, we're going to be looking at the broader picture, and what's happening with our progress toward the 2% inflation goal. Is the labor market continuing to broadly cool off and achieve a better balance? We'll be looking at that. Growth. We look at growth insofar as it has implications for our two mandate goals. We look at that. And we look at broader financial conditions. So we'll be looking at all of those things as we reach a judgment, whether we need to further tighten policy. And if we do reach that judgment, then we will further tighten policy.
Okay, and just in terms of the tightening of financial conditions, if that is having some kind of offsetting effect in terms of the need to potentially, again, raise rates, what then is the potential impact on the trajectory of rate cuts? could we see those maybe pulled forward or have to see more than what the September SEP indicated?
So the fact is, the committee is not thinking about rate cuts right now at all. We're not talking about rate cuts. We're still very focused on the first question, which is, have we achieved
You heard that, right? We are not even dreaming about the rate cut.
Inflation down to 2% over time.
Forget about
Sustainable.
thinking.
That is the question we're focusing on. The next question, as you know, will be, for how long will we remain restrictive? Will policy remain restrictive? And what we said there is that we'll keep policy restrictive
Man,
until
all
we're
the
confident
emails are-
that inflation is on a
No,
sustainable
Magdi is still
path
better.
down
The
to
volumes are
2%.
in control.
That'll be the next question, but honestly, right now,
Look at the
we're
cloud
really
condition here,
tightly
too.
focused on the first question. The question of rates cuts just doesn't come up
All right.
because I think the first, it's so important to get that first question, as close to right as you can.
They are right now burning out all the bulls here. You follow?
Steve Leisman, CNBC. Mr. Chairman, I guess I had assumed that there was a tightening bias in the committee. You say in the statement you're looking to assess the appropriate stance of monetary policy, the extent to which you may need to hike additionally. You didn't say earlier that you were sufficiently restrictive. There were forecasts for 2 rate hikes among most members
All the
of the
images are
committee.
bearish.
But then you just said that we haven't made a determination. Would you say the bias right now is neutral, that there is no disposition to hike again, and that the committee largely has moved off of this forecast for 2 hikes?
So look at the bounce, rejection.
Sorry, 1 additional hike.
And then we're gonna have to go lower.
No, I wouldn't say that at all. I would say the language, looking at it here, in determining the extent of additional policy firming that may be appropriate to return.
Supply
inflation
demand
to
class
2%,
applies here,
that's
folks,
the
okay?
question we're asking.
So is it right to think of that as a hiking bias is still in the committee here?
We haven't used that term,
All right.
but it's fair to say that's the question we're asking is, should we?
So
hike
there's a
more?
gap down,
It's not-
and
it's
that's what
not,
market going to feel.
And that is the question.
Probably.
You're right, that in September, we wrote down 1 additional rate hike.
Look at the
But,
MACD. Look
you know,
at the
we'll look at
MACD.
Another forecast, as you know, in December.
All right,
Thank you,
Brand viewers,
Chris
Kendall
Ruger,
coming in now.
Associated Press. Well, since the last meeting, the auto workers' strike has finished. Oil prices have leveled off, and yet on the other hand, you have the outbreak of war between.
Bears are in
Israel
full
and
flash
Hamas.
control,
How
folks.
do you
And
see
there is
all
a
those
gap in the
factors
bottom.
together affecting the economy going forward? How are you thinking about those?
So there are significant issues out there. As you point out, global geopolitical tensions are certainly elevated, and that goes for the war in Ukraine, it goes for the war between Israel and Hamas. We're monitoring that. Our job is to monitor those things for their economic implications. So the UAW strike, as you point out, is
Market trying to reverse, folks. Okay, watch
appears
out
to be
here a
coming
little
to
bit.
an end. Oil prices have flattened out. They haven't gone down, but I guess they've gone down a little bit from their earlier peak. Another one is the possibility
Still
of
the
government
bear in
shutdown.
control, but
don't
we
know
are-
about that one. So there's plenty of risk out there. But I would go back to the bigger picture from our standpoint is we've got a very strong economy, strong labor market, making progress on the labor market, making progress on inflation, and
POC just came in. Did you see that?
getting confident that we have achieved a stance of monetary policy that is sufficiently restrictive. That's really our focus.
Great. And just one quick thing. You last month had gone to York, Pennsylvania, where you talked to a lot of, last month.
All right,
where you
I'm in
talked
a
to lot of
call.
Small business owners. Just curious, what sentiments did you hear from them, or what did you picked up on, and was there anything that surprised you the most in terms of what they talked about?
Market about the
I
VWAP.
wouldn't say I was terribly surprised. I was very impressed by York as a town with a real strategy, and I would say it's very impressive what the people there have put together in the face of some difficult longer run trends about offshoring of manufacturing and that kind of thing. They've done a great job as a city, I think. What you
POC
hear,
came in.
is consistent.
Why POC
which
came
is
there?
People are really suffering under high inflation. You were there. We talked to some people who, were feeling that in their businesses, and other people who were feeling it in their home lives as well. It's painful for people, particularly people who don't have a lot of extra financial resources, who are spending most of their income on the essentials of life. So we know that wasn't new, but that did come through very clearly. in the conversations we had in New York. And, you know, I walked away from that even, you know, I mean, just thinking that we really, the best thing we can do for the U.S. is to restore price stability, fully
Look at
restore
the condition of the
price
cloud,
stability.
man.
We're not
Now,
failing that
good,
task
man.
and do it as quickly as possible, but
Magnet
also
still in
within
bear
these standards
territory.
we can.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You've spoken before about the pain that would likely be coming for the economy in order to get inflation down. But since the economy has not responded to rate hikes in ways that would normally be expected, have you changed your views on that at all, on how necessary or inevitable that kind of pain would be, say, for the labor market or overall growth?
Well, I think everyone has been very gratified to see that we've been able to achieve, you know, pretty significant progress
Still
on
no
inflation
squeeze, nothing.
without seeing the kind of increase in unemployment that has been very typical of rate hiking cycles like this one. So that's a
Squeeze coming
historically
in.
unusual and very welcome
Maggie trying to cross.
result. And the same is true of growth. You know, we've been saying that we need to see below potential growth, and growth has been strong, but yet we're still seeing this. I think
Maggie still
I
in
still
bear territory,
believe
but
in
crossing a
my
little bit.
colleagues,
We need to see the
for
volume.
the
We
most
need.
parts, I
We
think
don't
still
got a volume.
believe
We know how volume.
that is likely to be true. It is still likely to be true, not a certainty, but likely that we will need to see some slower growth and some softening in the labor market conditions to get to fully restore price stability. So, but it's only a good thing that we haven't seen it. And I think we know why. You know, since we lifted off, we have understood that there are really two processes at work here. One of which is the unwinding of the distortions to both supply and demand from the pandemic and the response to the pandemic, and the other is restrictive monetary policy, which is moderating demand and giving the supply side time to recover, time and space to recover. So you see those two forces now working together to bring down inflation. But it's that first one can bring down inflation without the need for higher unemployment or slower
We got
growth.
no
It's
volume
just-
here.
It's supply side improvements like shortages and bottlenecks and that kind of thing going away. It's getting a significant increase in the size of the
Still
labor
bears are in
market now,
control.
both from labor force participation and from immigration.
All
That's
the
a big
Yemen lining
supply
up.
side, gain that is really helping the economy. And it's part of why GDP is so high, is because we're getting that supply. So we welcome that. But I think those things will run their course, and we're probably still going to be left, we think, and I think, we'll still be left with some ground to cover to get back to full price stability. And that's where monetary policy and what we do with demand is still going to be important.
I'm curious against that backdrop, if you've gotten any clarity on lags, if you have an economy that's been so resilient to high rate increases, does that suggest to you that there isn't necessarily this huge wave of tightening that's still coming through the pipeline and that it may have already come into effect?
I continue to think it's very hard to say. So it's been 1 year at this meeting. 1 year ago, this was the fourth of our 75 basis points hikes. So that's a
No
full year
volume.
since then. I think we are seeing the effects of all the hiking we did last year, and this year we're seeing it. It's very hard to know exactly what that might be. But you could, for example, an example of where you wouldn't have felt this yet is debt that had been termed out. But it's going to come due and have to get rolled over next year or the year after. So there are little things like that where the effects are just taking time to get into the economy. So I think we have to make monetary policy under great uncertainty about how long the lags are. I think trying to get a clear answer and say, oh, I'm just going to assume this is really not a good way to do it. And this is one of the reasons why we have slowed the process down this year, was to give monetary policy time to get into the economy. And it takes time, we know that, and you can't rush it. So slowing down is giving us, I think, a better sense of how much more we need to do, if we need to do more.
Here we go.
Michael McKee from Bloomberg Television and Radio. I'm trying to connect the dots here. One quick clarification I want to ask about Rachel's question is, you said you need slower growth. You had always said before a period of lower than trend growth. Has that changed? And two, it sounds to me like you're basically saying here that the kind of the dot plots out the window, that every meeting is live with the possibility of a rate increase for right now. It doesn't matter about the turn of the year, and that there's not an objective way to determine whether or not you've got enough tightening in the system. It's just going to be a subjective judgment meeting by meeting.
Light under the tunnel coming in.
Let's talk about the dot plot first. So the dot plot is
Still the conditions are not great right here.
Of what the people in the committee thinks is likely to be appropriate monetary policy in light of their own personal economic forecast. In principle,
apply a T class here, folks.
That's not like a plan that
apply a T class here.
That's a forecast that would change. For example,
these are the high of the day right there.
I wouldn't write down
and
that
that's
dot, 6 weeks later. Think of the number of things that could change your mind on that. So I think the efficacy of the dot plot probably decays over the 3 month period between that meeting and the next meeting. But nonetheless, it's out there. We do personally update our forecast, but we don't formally update the dot plot. So, I think we try to be as transparent as we can about the way we're thinking about these things. We're laying out there our thinking, and as we approach the meeting, we'll all be, my colleagues and I will be talking about how we're processing that data. In terms of
market has a resistance right there.
In terms of growth, what I said was below potential. So what you have here recently is growth.
Okay, I took the profit. I'm out.
Temporarily, potential growth is elevated for a year or two right now over its trend level. So the right way to think about it is
beautiful, folks.
This year.
To trade,
people
great.
think trend growth over a long period of time is a little bit less than 2%, or I would say just around 2%.
Put side and call side.
But, what we've had is with the improvement in the size of the labor force, as I mentioned. Through
Man, I know he's gonna go, but it's okay. I don't want to be part of the ugly game.
And with the better functioning in the labor market, and with the unwinding of the supply chain and shortages and those kinds of things, you're seeing actually elevated potential growth. There's catch-up growth that can happen in potential, and that means that if you could be growing at 2% this year and still be growing below the increase in the potential output of the economy. I hope that's clear. That's really what's going on. That's why I would say it as below potential.
But if you could, I would ask about
one second.
Meeting by meeting. Are we essentially now supposed to assume that it's a meeting by meeting, live meeting with a chance of a rate increase?
Or a POC just came in, folks. So there is something happening. The flow is right there. Calls coming in. Bullish market is looking bullish. POC just came because market tried to pull back, and this acting as a support.
I don't know that I want to just accept anybody's characterization of it. I'll tell you how we're doing this. So we're going meeting by meeting. We're asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive to bring inflation down to 2% over time. That's the question we're asking. We're looking at the full range of economic data, including financial conditions and all of those things that we look at, and then we've come very far with this rate hiking cycle, very far. And you saw the spread at the September meeting of, it's a relatively small spread of people think 1 or 2 additional hikes. So you're close to the end of the cycle. That was an impression as of a belief.
All right, market want to go higher, folks. Look at that. That's it.
A plan of the future. And so we're going into these meetings one by one. We're looking at the data. As I mentioned, we're also, we're being careful. We're proceeding carefully because we can proceed carefully at this time. Monetary policy is restrictive. We see its effects, particularly in interest-sensitive spending and other channels. So that's how I think about it.
Market trying to go up. Nice there. I bought a small, put a 10% profit here now.
Several weeks. Have you given any consideration to the pace of your asset runoff program?
Way out of the money.
And if there were a judgment that the higher term premium was endangering the dual mandate goals, would that be a reason
225 they could go or not? I don't know. Let's see.
Or should we think that as more of a technical question around reserves?
So, committee is not considering
QQQ is going.
Changing the pace of balance sheet runoff. It's not something we're talking about or considering. And I know there are many candidate explanations for why rates have been going up, and QT is certainly on that list. It may be playing a relatively small effect, although I would say at $3.3 trillion in reserves, it's not.
Wow,
I think
look
it's
at
hard
that.
to make a case that reserves are even close to scarce at this point. So that's not something that we're looking at right now.
Target is 422 probably, right? Before they're gonna burn everybody out.
With Politico. I wanted to ask about the Basel
424.
III endgame
Week about the body coming in.
You've gotten a lot of pushback from
Let's
people
see.
on different aspects of the proposal, and you yourself expressed
Wow,
some
there's a
reservations.
battle
I'm just
going
curious,
on.
could you accept finalizing that proposal without significant changes?
So that proposal is out for comment, and we expect a lot of comment. We won't get those comments until the end of, well into next year. We've extended the deadline, and we'll take them seriously. We'll read them. I'll say what I do expect is that we will come to, we're a consensus-driven organization, we'll come to a package that has broad support on the board.
So does broad support mean more support than the proposal had?
Yep.
It means broad support.
122.66. Continue going.
Janelle Marte with Bloomberg. So, in
Target
addition to
is
persistence,
424,
when we look at
folks. Okay,
long-term
but
treasury
remember,
yields, what
profitability is
watching
important
to
because this is
evaluate
FOMC.
how those tighter financial conditions are
They can
hitting
pull
the
back,
economy,
do the
and
dramas.
if it
We
will
are already
lessen the
ticks
need for further
1,000.
tightening?
Market is bullish.
Also, do you think that those higher yields could affect
Target is there.
Banking stress?
So what do we look at? we
Keep
look at
going.
a very wide range of financial conditions. And in fact, as you'll know, different organizations publish different financial conditions indexes, which can have 7 or 8 variables, or they can have 100 variables. So there's a very rich.
Best thing to apply your T class here.
We tend
Look
to
at
look
that.
a few
Market
of
is
them.
still bullish.
I'm not going to give you the names, but they're a few of the common ones that people look at. And so they're looking at things like the level of the dollar, the level of equity prices, the level of rates, the credit spreads. Sometimes they're pulling in credit availability and things like that. So it isn't any one thing. We would never look at, for example, long-term treasury rates in isolation, nor will we ignore them. But we would look at them as part of a broader picture, and they do play a role. Of
All right,
course,
expect a
in
pull,
many,
maybe. Something is
of the
going to
major
happen here, folks.
Standard financial condition indexes. Your second question was. Banking stress. So it's something we're watching. As you know, we did have, there were issues with interest rate risk and also, funding uninsured deposits in the things we went through in March and thereafter. And so we've been working a lot with financial institutions
Right, pulling back.
to make sure that
Expect
they
a
have
little pullback. Now, this is the
good
rejection
funding
market just
plans
found,
and
okay?
good- and,
So now we need to see what
good
going to
funding
happen
plans
here.
for how to deal with
Filling up the
current
gas, pulling up the
portfolio,
back, right? All
unrealized
those
losses
things.
that they have. We do think their banking system is quite resilient. We had a handful of bank failures, but so that's what we're out there doing, and
So we might go and test these. You follow right here.
Are materially
And that's what we
changing
need to
that picture,
watch
which is
here.
one of a strong banking system and one where there's
Ticks
a
filling up the
strong
gas.
focus by banks and by supervisors on liquidity, on funding, and those sorts of things.
Thanks, Mr. Chair. Scott Horsley from NPR. Last week, you and your colleagues put forward a proposal to lower the cap on debit card swipe fees for comment. Could you just talk a little about the considerations there, what it would mean for merchants, for banks, for consumers, and also just what y'all are seeing in terms of the use of both debit and credit cards in the payment system?
So you're right. We put a proposal out for comment is what we did, and this is a job that Congress assigned us, as you of course know, in Dodd-Frank, and all we can really do is faithfully implement the statute. That's all we're trying to do. What else can we really do? It's a 90-day comment period. We typically don't comment on these things.
Still
once
bulls
they're
are in
out for
control, but we
comment.
need a pullback,
And we
man.
do
Come
hope
on,
these
pull
stakeholders,
back.
and we know that they will use this opportunity to express.
The quickest way from 1 billion points of data to
Advertisement, folks, just a second. All right, so while advertisement coming in, folks, what happened here, right here, this is just demand zone. So if market test is healthy, this demand zone, that's your POC right there, little bit here too. So if they pull back here, I like to add more, but I'm playing very teeny mini right now. Whatever I did in the morning, I mean, 2 trade was the great. Now I'm trying to add here. Right now, I only have a small. I only put $1,000. So I want to put a little more here, but need a pullback, So let's see.
I think the core PCE came down by almost 60 basis points.
Man, come
in the third
on. See, I
quarter.
knew these people
So
wanted to go
I think
right away.
the best thing I could point to you to would be the September SEP, where the expectation was that inflation by the end of next year on a 12-month trailing basis would be well into the twos, and the year after that further into the twos. So that's if you look historically, that's
We need to
sort
see
of
market
consistent
create
with where
diversion here,
inflation
or gonna
comes
go
in. It does
more
take
to the
some
moon.
time.
Volumes are
And as you
holding
get,
right now good.
as you
right?
get
So
further
volumes
and
are good
further from
holding.
those highs, it may actually take longer time. But the good news is we're making progress, and monetary policy is restrictive, and we feel like we're on a path to make more
Ticks are
progress, and it's
coming
essential
in.
that we do.
Well, you said in the past that doing too little on interest rates could take years to fix, but the cost of doing too much could be easily fixed. How robust was the debate about this pause on the doing too little side?
That's always the question we're asking ourselves, and we know that
Yeah, this is
if
second
we
rejection
fail
kind.
to restore
Okay.
price stability, the risk is that expectations of higher inflation get entrenched in the economy, and we know that that's really bad for people. Inflation will be both higher and more volatile. That's a prescription for misery, and so we're really committed to not letting that happen. For the first year or so of our tightening cycle, the risk was all on the side of not doing enough.
Market might create a bull flag or
we've come
something
far
like that.
enough
Let's see.
that the risks are, have gotten more two-sided. You can't identify that with a lot of precision, but it does feel
Let's see
like
here.
the risks are more two-sided now. But we're committed to getting inflation back down to our target over time, and we will.
Simon Rabinovich with The Economist. Quick follow-up to the question about banking stresses. You talked about how the banking system is resilient.
We didn't test the
Of course,
support
part
yet,
of the
right? Yeah,
resilience
this is the
past
demand.
year
We didn't
stems
even
from
test
the
yet.
Bank Term Funding Program that you launched
Man,
in
this is
March.
bullish, man. This-
Given that bond prices have not recovered, that unrealized losses are probably mounting, how likely is it that you might have to extend that program in March next year?
At least come back and test.
Good question. We haven't really been thinking about that yet. It's November 1, and that's a decision we'll be making in the first quarter of next year.
Okay. Sorry, quick separate question about inflation expectations. The Michigan Sentiment Survey showed a big jump in 1 year ahead inflation expectations last month from 3.2 to 4.2. Last year, you said that particular survey was a really decisive factor in one of your rate hike decisions. If it stays elevated next time around, how big of an input will that be into your December thinking?
Yeah, we look at a range of things. I think the UM thing got blown out of proportion a little bit. It was actually a preliminary estimate that got revised away, and I said it was preliminary in that, but that didn't get picked up. So we look at many things. I mean, so really look across the broad array of surveys and also market-based estimates, and we do that.
Man,
really
they want to
carefully
go
at
now.
every
Look at
meeting and
this.
between
Look
meetings.
at the
There's-
sloping support
it's
building
just
now.
clear that inflation expectations
Man,
are
they wanna go.
in a good place. The public does believe that inflation will get back down to 2% over time, and it will. They're right. So, and there's no real crack in that armor. You can always find one reading that is a little bit out of whack, but
Not
I'd
even
say the
pulling. Look
bulk
at
of
the
them are
building
just
sloping support
very
right there.
clear that the public believes that inflation will come down, and that's, of course, we believe that's critical
boy.
in winning the battle.
Hi, Chair Powell. Megan Casella with Barron's. Thanks for taking our questions. I wanted to see if you could talk about the neutral rate. You mentioned today that you're still debating whether rates are sufficiently restrictive, and you've recently said that evidence is suggesting policy is not too tight right now. So I was curious if you could elaborate on that at all and whether that means the neutral rate, in your view, has risen.
Yeah. So first thing to say is that it's very important. It's a very important variable in the way we think about monetary policy, but you can't identify.
All right,
any precision
market
against
got a
it.
little
We know that. So
rejection coming
you have to
in.
just take that. You have to take your estimate of it with a grain of
MACD
salt.
is not. There is no volume coming in,
What we
folks.
know
Okay, a
now
little bit.
is
Keep that thing in mind.
Within a range of estimates of the neutral rate, policy is restrictive, and it's therefore
Ticks are still pulling
downward
back.
pressure on economic activity, hiring, and inflation. So we do talk about this. There's not any debate or attempt to to sort of agree as a group on whether R-star has moved or not. Some people think it has, some people haven't said, that don't think it has. Ultimately, it's unknowable, and so really, again, what we're focused on is, looking at the data and giving ourselves a little more time now to look carefully at the data by being careful in our moves. Does it feel like monetary policy is restrictive enough to bring inflation down to 2% over time? That's the question we're asking.
Ticks are holding down price.
I think, years from now, economists will be revising their estimates of R-star as it existed on November 1, 2023. We can't really wait for that in making policy. We have to look.
QQQ wants to go. The price is.
Think about them, and ultimately, we've got to look at the effects of that policy's having, accounting for the lags, which makes it difficult.
If I could follow up on a wages point earlier, you talked about the inflation outlook, but I'm curious if you have any concerns whether wage inflation at its current level could risk pushing up overall inflation or reacceleration.
So if you look at the broad range of wages, they have wage increases have really come down.
We gotta keep rejection coming in, folks. Watch out here, okay? Keep rejection coming in here.
To a level where they're
Ticks are pushing it down and creating a bearish divergence, folks. Bearish divergent market coming.
Inflation over time.
Bearish divergent. We're gonna go and pull back.
Over time, so it's much closer than.
Watch out.
And that's true of the
all
ECI,
the bulls will be
which
trapped.
is the one that we got this week. It's true of average
Bearish
hourly
divergent.
wages and compensation per hour too. So, and all of them are kind of saying that, which is great. You have to look
Weak
at a
by
group
the
of them
body,
because
just rejection
any one
camp.
of them can be idiosyncratic in any given reading. So that's what you see. And so what you saw with the ECI reading was, if you look back a couple, comes out 4 times a year. If you look back a couple of quarters,
Look at the what kind of candle market creating right there.
Substantially.
It's
in
deceptive.
June. And then the September reading was more or less at the same level as the June reading. So in a way, it's just
Ticks are going
validating
down.
that decline. And it was very close to our expectations.
Look at the
internally, too.
rejection
So
here on
I think
QQQ.
we feel good about that. Also, I would say it isn't, in my
Right
thinking,
there.
it's not the case that.
And
that
MACD trying to
wages
cross
have been
here. Look
the
at that, folks.
principal
Watch out.
driver of inflation so far. Although I do think it's fair to say that as we go forward, as monetary policy becomes more important relative
Yep,
to
market
the
pushing it
supply
down
side
now.
issues I talked about in the unwinding of the pandemic
Keep going
effects,
lower, lower.
it may be
MACD
that
crossing.
the labor market becomes more important over time too.
Yep. That's the MACD.
Hi, Nancy Marshall again. Sir,
Market wanna go
Marketplace.
lower.
Chair Powell, are you now as concerned about overshooting and raising interest rates too much as you are about getting inflation down to the 2% target?
We're gonna go and test
So
the
as
POC
I
probably,
mentioned,
right here.
I think for much of the last year and a half, the concern was not doing too
Right
much.
here.
Not
That's
doing
what
enough.
market wanna
It
do.
was not
This is the
getting
bearish.
rates high enough
All the
in
bulls are trapped
time
at the top.
to avoid having inflation expectations, higher inflation expectations become entrenched. So that was the concern. I think we've reached now more than 18 months into this. You can see by the fact that we have slowed down, although we're still trying to gain confidence in what the appropriate stance is. But you can see that.
All right, market is bearish, divergent right here.
That the risks are
I'm
getting
thinking
more
they're gonna
balanced.
go
I'll
and
just say
test the
that they're getting
POC.
more balanced. The risk of doing
Let's
too
test
much
the
versus
support
risk
right
of doing
here.
too little
Something
are
gonna
getting-
test.
Are getting more closer to balance because policy is clear. I think clearly
Right here,
restricted
something they're
at
supposed to
5.25%
test.
to 5.5%. That range. If you take off a mainstream estimate of the expected inflation, take 1 year inflation, you're going to see a real policy rate that is well above mainstream estimates of a neutral policy rate. Now,
MACD
that's
cross,
arithmetic.
bearish,
It
folks,
doesn't
okay,
really-
bearish now.
The proof is really in how the economy
Just
reacts.
MACD filling up the
I
gas,
would
so we're
say
gonna
that
have
we're
another
in a
10,
place
15 minutes here.
where those risks are getting closer to
Right
being
here.
balanced.
And you said the proof is how the economy reacts. What are you looking at to be sure you're not overshooting?
Well, I think what we're looking at is, is inflation still broadly cooling? Is it sort of validating the path we saw over the summer, where inflation was clearly cooling and coming down? Now, we've seen periods like that before, and there hasn't been follow through. The data have bounced back. So what are we seeing? You know, are we seeing, is inflation still coming down? So that's the first thing. Second thing is, in the labor market,
Right now, MACD bearish, remember that.
Positive rebalancing of supply and demand, partly through just much more supply coming online, and with labor demand
Squeeze
still
coming in now,
clearly
look at that.
very
Wow.
strong. When you have the kind of job growth we've had over the
Let's
last
see what kind of
quarter,
squeeze is it.
it's still very strong demand. So, and you see wage increases coming down, as we discussed, but coming down, you know, in a kind of gradual way. I think that's what we want to see, that whole set of processes continue.
Brian Mena, CNN. Do you think that has been any structural change in either consumption or in the job market that's pushing up consumption? You obviously saw the third quarter GDP figures, which were strong, and some economists have expected revenge spending to have fizzled out by now. So I'm kind of wondering if there's been any structural change in consumption.
I wouldn't say there's been a structural change in consumption. I would say it's certainly been strong. And so a couple of things. We may have underestimated the balance sheet strength of households and small businesses, and that may be part of it. There may be, you know, we've been, like everyone else,
MACD bearish, we're gonna go lower low.
the number
We're gonna
of-
go and
the amount of
test this.
savings that households have from the pandemic when they couldn't spend on services really at all, or you know, in-person services. And, you know, there can still be more.
Bears
of that
are
than we
lining
think.
up.
Although at a certain point, we're going to be getting back to pre-pandemic levels of
Volume.
savings. We may not be there yet. So things are, clearly people are still spending. The dynamic has been really strong job creation, with now wages that are higher than inflation in the aggregate anyway. And that
MACD
raises
filling up the
disposable
gas.
income, and that raises spending, which continues to drive more hiring. And so you've had a really, that whole dynamic has been, and also at the same time, the pandemic
Still the
effects
bears are in
wearing off,
control.
so
Any
that
push.
goods availability,
No good.
automobile availability is better, or was better. I think it still is. And from a business standpoint, there are more people to hire, and it is more labor.
Still
supply. So
MACD
the whole thing
bearish.
has led to more growth, more spending.
Yeah, we need to
and that
give some
kind of thing.
time.
It's been, you know,
See,
it's been
this
good.
is the setup I was
We've
talking
been
about.
achieving
This setup,
progress on
we need to
inflation
now
in
figure it
reals.
out.
So,
What gonna do, market?
It's been a
Filling up
dynamic.
the
question
gas.
is how long can that continue? And, you know, I just think the existence of this second set of factors at this time, which is the unwinding of the pandemic effects, that's what makes this cycle unique, I think. And
Ticks are
you know,
coming
we're still
down.
learning. That took longer for that process to begin than we thought, and we're still learning about how it plays out. That's all we can do.
Go to Daniel for the last question.
Thank you, Chair Powell. Daniel Avis from Agence France Presse. Just a quick question following up on an earlier one. With regards to the Israel-Hamas conflict, the Fed's financial
Yeah,
stability
market could go and
report
test the
said
POC.
the Israel-Hamas conflict and the
If
conflict
support
in
breaks
Ukraine
right here,
pose
this is
important
right here
risks to global
demand.
economic
If
activity,
that breaks, then we can go and test the
possibility
POC.
of sustained disruptions to regional trade in
So I'm
food, energy,
waiting.
and other commodities. You've had organizations like the
I
World
think
Bank
MACD feeling
warning
that this is
of
the bull.
possible
Look at the cloud condition. You see
surge in oil
this?
prices if the war
The bulls are lining up.
spreads to other countries in the region.
But
I'm just
how
wondering
far is it gonna
how
pull?
the
Because
Fed is
MACD filling up
monitoring
the
these
gas.
developments in the Middle
How
East.
far?
You mentioned they are, and just what the potential economic impact could be.
It's looking bullish,
if the
but we
conflict
need
does
to,
spread to other countries
you
in the
know, we
region.
want to make sure how far.
I wouldn't want to speculate too much, but I'll just say so. You know, really the question there is, does the war spread more widely?
Still
And
MACD
does it
not
start to
curling.
do things like
Nope,
affect oil
not yet.
prices in particular, since this is the Middle East.
Squeeze
we're talking
coming in,
about.
but
The price of oil has really not reacted very much so far to this. As you know, as the Fed, as the Federal Open
Head and
Market Committee,
shoulder
our
in
job
1
is
minute.
really to understand the economy.
This one, yeah,
and
that's true.
economic effects.
Small,
And
small
it isn't
head and shoulder
clear at
pattern.
this point
Still MACD bearish.
that the
So
conflict
it's
in
going
the
down,
Middle
MACD
East
going down, price going
is
up,
going to-
down, up, down,
is
it's
on
still
track to
there.
have significant economic effects. That
So it's
doesn't
filling
mean
up
it
the
isn't
gas to
incredibly
shoot up.
important and something for
But
people
when?
to,
That's what I'm waiting
you
for,
know,
when to shoot up.
take really important notice of, but it may or may not turn out to be something that matters for the Federal Open Market Committee as an economic body. But what the Financial Stability Report does is it calls out risks, and that's what it's doing, is calling out a risk of that. And the war in Ukraine,
See this sloping support?
War in Ukraine, did have immediately
And
very
over here,
significant
MACD keep going down,
macroeconomic implications
keep
because
going
of
down.
the connection to commodities. So, thank you.
Thank you.
Thanks very much.
That was Fed Chair Jay Powell speaking for almost an hour, for 50 minutes.
All right, he's done,
This
folks.
is the Fed
He is done. All right, so Jerome Powell is walking out of the house. All right, let's see what happened here. MACD didn't cross yet. All right, resistance is here. Still the MACD is bearish, folks, so I'm not gonna go anywhere right now. Still MACD is bearish. Yep, no squeeze, nothing. No who has a control over, not yet. So still bears a bearish cycle. Only the cloud we need to watch, see what happens. Market might bounce here and then create a bearish diversion. Right, something like that happened too, folks. Be plan accordingly. Okay. Right now MACD is still holding, pointing south. So we need to see what happens here. Nothing to get excited here. Look at that. Boom, 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 boom. All right, so that's your rejection. Look at the cloud condition. MACD need to cross, folks. We need light under the tunnel. We need volume. If there's no volume, it could be a bearish divergence. That's why you gotta be very, very careful, because MACD still is bearish. Look at the squeezes. It could be a dangerous here. Yeah, I'm telling you, you need to be very careful here. You know, they're gonna make you look at that. That could be a bearish, and we could go lower low. Yeah, I'm telling you, these people are champion. That's why gotta wait here. There's nothing here. There is nothing here. I need something. Bull, bear, something. What they are doing, what they are feeding. Right now look like bearish cycle. You see this? Weak about the body coming in. That scares me, so go long. Only the cloud is telling me we are bullish. But hey, you know, I need MACD. I need volume. If there is no volume, I can't trust. If there is no volume, we cannot trust this. You know, and they do kaboom. All these bulls are lining up. They're gonna burn them down. Yeah, that's what market maker normally do, man. And then they go. So, and I don't see here support anything. I need something, man. Or they're gonna show like that, but can't trust that. MACD still no volume. See that? Still no volume. Yeah, it's deceptive still. Deceptive. Look at that. MACD crossing? No, not yet. Slowly going. Not yet. Jerome Powell is done. MACD crossing, no volume. Oh, now light end of the tunnel coming in, little bit right now. Little, look at the cloud condition here. Cloud is building little bit. Yeah, be careful, folks. Okay, I'm telling you, look at the bear. Yeah, they're gonna make a bull, and then come down and slash everybody out. Yeah, they are doing that, champion. Right there. Look at this big flush on a ticks. That's why I said that. Watch out. Telling you, because this is the good. Look at this. This is diversion, bearish diversion. Watch out. They want to dump. Yeah. How far? POC is right here. Bearish diversion. So bulls are entrapped right there. and now they're going down. Excuse me. All the volatility is over, everything is over. Premium gonna burn out everybody's. Cloud conditions are the only one is telling me bullish. But over here, divergence coming in is bearish. MACD also bearish. Squeeze coming in bearish. Right? So they're gonna go and come bring down the everything right there. Market about to close in 30 minutes. Yes, market gonna close and all the bears gonna print. But support is right there, so I'm not going right now. We want to wait. Okay, that's it, game over. Yeah, market got a rejection at 200 SMA, folks. 423.62. Remember, 423 is right here. This is a 200 SMA rejection. Right there is a 200 we test. That's a 200 SMA right there. That's the rejection. Look, see that 200 SMA rejection, 423.62. That's the rejection. All right, that's today's rejection. Puts are coming in, calls and puts. MACD is still filling up the gas. I think we are done here, folks. That's it. So they got a rejection at 200 SMA. Now they're just gonna burn out all the bulls and bear. That's the game. All right, so we're gonna compress here. This is 200 SMA right here. Just want to see what they're gonna close above the 200 or just gonna stay right there. That's the question. Look at the cloud, man. Something is brewing in the back. Calls are coming in, but now I don't trust, man. They're not gonna go right now. It is already closed, pretty much. All right, 30 minutes left. All right, MACD continuously bearish. So, done for the day. No volume. Look at that. Cloud is the only one who's telling something is going cooking. That's your bearish divergence. Bears are in control. Wow, look at the market as a continuous squeeze coming in now. What they are trying to do here? What they are doing here, Cloud? Thirty minutes to go. Last 30 minutes. Most of the time we give money back to market makers. Remember that. Keep that thing in mind. Look at the cloud. 200 SMA market trying right now. 200. Wow, look at that 200 SMA. MACD crossing, light under the tunnel coming in. Interesting. This is something interesting. But look at that. Any bounce? No good. Any bounce? No good. POC, that's a 200. Look at that. This is all right. So they are controlling right now. No good. Any market need to leave the station from here to here. Look at the cloud conditions. Solid bearish divergence. 1, 2, 3. Zero strength. That's a 200 SMA. Still MACD hugging and kissing. No volume. Man, I like to go long, but small if I would, more. But MACD over here is still bearish. And no volume. We need a strong volume, no volume. You see, like this, Manhattan Tower. And cloud is this. So this rejection is a 200 SMA. Keep rejection right here.
Price going up, MACD going down.
Yep, but time is nothing here. Timestamp is 3:40, so nothing gonna happen here. It's just burn out the things. Like I bought my call here, I put $1,000. Right now I'm getting back 95 cents I paid. Right now I'm getting 25 cents, burning out the money. Correct, but just to give you idea that it's just nothing. Even though price is higher at the time when I bought it, but it's burning because it's out of the money. Their goal is to burn out. Nothing much here. Look at the squeeze, continuous squeeze there. But in the last 30 minutes, we all lose money because they know exactly what to do. Because the bearish divergent. You see this divergent continuously. And over here, no volume. Nothing. So goal is they're controlling. That's the reason. So market might close right here at the 200 SMA. But they did test, folks. Did you see that? They did test the 200 SMA today. You see that? They test the 200 SMA. Whatever I said in the yesterday video, that they're going to test the 200 SMA. I was thinking they're going to close about the 200 SMA, but yeah, it's okay. Same one and the same, right? But it was amazing day today. Doesn't matter, even though we caught both put and the call.
Be dumb tomorrow then if we reject this level, no? Because it's supply on the daily.
Friday option expiry, so tomorrow maybe the sideways. Probably all these bulls get excited, and then Friday do some drama. So we will figure it out tomorrow. Let's see tomorrow what happens. Folks, today is a tick class, advanced level tick class today. So see you at 6 o'clock. Remember those who are, okay? 6 o'clock. Bears are in control. You see these volumes, bear. So don't expect anything. Nothing. Yo, bearish divergent. Okay, we could go and test the cloud. This is the third time we're testing the sloping. Now we could go lower and test the POC right here. Something could happen. This is the support area. This trend line breaks. Okay, that's what it looks like. MACD, the ticks are filling up the gas.
Yeah, the cloud is very lagging right now, lagging indicator.
Yeah, clouds, evening time, man, we cannot control. They will control. So these are super bullish, but over here, they are controlling the volume. You see this? You see this one right here? That's why there is nothing here. That's why I keep saying that I want to make sure if something comes in, then I would believe. Otherwise, it's just BS. Yeah. because we are at the 200 SMA. The cloud is nothing here. Done for the day pretty much. It normally an FOMC with I go crazy too sometimes, but this I was expecting to break, so I wanted to go more, but it's never came back. Never came back here. Look at that. Never came back. When they do sideways, no good. This cycle is, you can see that, no good. That's why. So they're gonna burn out all the everybody's. That's what it is. Look at the puts. How many puts are coming up? 3 million, 3 million, 10 million, 3 million. Look at the puts are people are loading right now. Do you see that? Puts coming in. Look at the $2 million Tesla put, 2 billion Tesla put coming in, and phase and all those puts coming in, man. This is going to be disaster coming. Remember, folks, what did I say?
And they really hate Elon.
Yeah, I mean, they're gonna burn down the whole thing. No, because the cloud conditions are not great, man, on a daily. So, and supply demand too. So we need to make sure what happens. I want to see this all the bounce we have last 3 days, right? Market has a last 3 days, but how long that the demand lasts is important. So I need to see how far the demand. We are at the 425. That's the strong supply. 425 and 4. Yeah. You see this bounce we had? This is the important area right here, which is 435. So 425 and 435. We need those two areas to test. Until then, so just those who are super duper bullish for the market, we need those areas to watch. Until then, we gotta go one step at a time. So today market did bullish. Well, that's okay, but not much. 345, market about to close in a minute. MACD trying to cross now. Look at the MACD on a daily. Already, nothing here. Man, people are loading puts like anything. Isn't it? 2 billion, man. This is so what happened Tesla today? Did you see that? Tesla bounce. Yeah, Tesla is still going up 205. Yeah, most of the stock bounced today, folks. Alrighty, call it a day. Today any earning? Apple earning, huh?
Apple's tomorrow, Josh.
Oh, Apple's tomorrow. Tomorrow, Thursday, yep, Thursday. Somebody said yesterday also billion came out. No, you never know. It can happen in after 1 month. It can happen in after 1 week. You know, we do not know when they're gonna pull the rug. Remember, rug pull, we do not know. Nobody knows when they do it. Right now, bullish cycle, folks. Market is. Remember, today was FOMC. We test because market is oversold. So market goes up. Every garbage goes up with it. Anything, good and bad. Good and bad. Meta was great today. Yes, folks, Meta was good today. Look at that. Meta was continuous bullish. Look at the Meta and Microsoft. I'll bet you. Look at the Microsoft too. Meta and Microsoft. The rest all is no good. They want to wait for earnings to finish by this Friday, by tomorrow probably. Okay, market about to close in 10 minutes, folks. 10 minutes. Market is closed today at 200 SMA. All right. Today is over, folks. Even the bears cannot make money, bulls cannot make money in here, nothing. Oh boy, somebody could short here, folks. Look at this diversion. Look at these cloud conditions are there too. Sloping support breaking, look at that. If anybody shorted right there. But cloud conditions are applied too. Why sloping? Look at this market sloping resistance right there. But this is not the setup for anybody to trade. This basura. All right. Look at the MACD getting separated, volume coming in. They could go a little bit lower. Right here. No, Apple earning is not today, folks. Apple earning tomorrow. Alright, MACD oscillator 0. Tesla at 205, NVDA at 425, Google 126, Microsoft 346. Already. Oh boy. Look at T class. Please, folks, post your Discord user ID on a tick classroom, so we can. I would create a group. Create a tick class. Right, today is a tick class, right, folks? Yeah, tick class. Yeah. Please post your Discord ID. So if you're listening, RGC, Harvinder, Ali, Brian, Donna, Gecko, Kate, Nitro, everybody post your user Discord ID on the group. Which group? Tape reading class group. I just post the message. Put your Discord ID so we can make sure that everybody lines up. Okay. Six o'clock, folks. Okay, 6 o'clock. Yeah. I was expecting a bigger swing actually today. At least they would have gone to 425 or something like that. And these could have gone lower also. I was expecting lower, fill up the gap down and trap all the bear. But when I saw this candle over here, right, this bounce, okay, I said, man, they're finding the support here. And then we went a little lower low. I said, okay, that's about it. All right. All right, market is closing in a minute. Already call it a day. Two more minutes to go, market to close, folks. PayPal is oversold. PayPal is super duper oversold. Qualcomm is after hours too. Okay, market close, folks. So if any earning comes out, let me know. I'm gonna keep eyes on it. Okay, I'll post it here, folks. Okay, let me see which one is coming in earning. Not yet. All right, Qualcomm earning came out, folks. Qualcomm beat the EPS. Qualcomm beat the EPS right there. I'm posting right here. Where did it go? All right, Qualcomm beat the EPS. $1.92 expected. They beat the revenue too. So Qualcomm is right here. Qualcomm got a great balance sheet, folks. Remember that. Qualcomm got a great balance sheet. Just a second. Microsoft looking super bullish, and if market goes to the moon, then Microsoft also could go higher, folks. Okay, just to let you know. So I'm very bullish on Microsoft, but I need a market first. So I need a market. You see this market? I want to see what happens around here. It will be a pullback and then go to the moon. Something like that can happen, but I don't want to go like that. We want to wait. Right? So this sloping resistance, I need to see what is we are breaking or not. You follow? So let's see. And if this breaks, right, we could higher, because what happened, market has a cycle. So look at this bear cycle, right? Bear, bull, bear, bull, bear, bull, right? So you need to find out what's going to happen around here. Okay, we can't, because when everybody is bullish, we buy and become bullish. That's not the way to be bullish. You want to be bullish when market is at the bottom. You don't want to sell here. You want to sell here when market is high. Just to give you an idea, when market is here, to buy, sell higher. When market is bottom, that's good time to buy something, not to sell. Correct? That's how I think. Somebody was posting rude comment about the channel, back and forth. Where? So I cannot control. It's okay, people do that, folks. You know, there's a lot of people. Okay, let me see. Folks, anybody post any rude comment on YouTube, always text me, because those are the people we do not want in our community, period. If those text me, because those people we do not want, period. Doesn't matter. How was your day, Josh? Yeah, Jeremy, was day good? Not bad. But only, you know, those two trade printed good. That last $1,000 burnout, that's okay, no big deal. Alrighty. Anybody, any question, folks, let me know. Alrighty. That's fine. That is. Alright, folks, today let's call it a day. I'm gonna go for I need to go for a walk, man. Let me have a fresh air. But everybody, thank you for being here, folks. I really appreciate it. And see you guys tomorrow morning. If anybody any question before I go, all right, let's spend 5 minutes out here. If anybody any questions, let me know. I'm gonna post this stuff so you can see. All right, this is today's. Somebody's Okay. After our activity is nothing. All right, so let's call it a day. Call it a day. All right, Qualcomm going to the moon. Look at that Qualcomm. 115, and tomorrow they're gonna take a toll. Thursday, Friday. Intel. All right, call it a day. Airbnb. Oh, Airbnb earning. Okay, let me see. Oh, Airbnb dumping. Wow, $5. Airbnb is dumping. Airbnb right there. I'm gonna post the earning came out. Okay, right here. Airbnb. I'm gonna bring it to you guys so you can see. So Airbnb EPS beat and revenue beat too. Wow. Okay. Okay. How come Airbnb like this, man? Dashboard. I mean, dash. Post here. DoorDash. Just posted the DoorDash. Etsy. Etsy bit the revenue, right? Etsy. So let me see. Etsy. Man, dumping. Etsy. Look at Etsy dump $10. Wow. Anything else I can see? Yes. Okay. Any other Qualcomm we already posted? Roku. Roku. Let me see Roku. Roku going up. Roku is up. Heavily shorted stock. Yep, thank you. Zillow seems to have missed. Zillow dumping. Yeah, a little bit. View American Airlines. American Airlines is doing very bad, folks. Oh, Alcoa Corporation. No, man, stay away from this kind of. I mean, I understand these are maybe what battery company is this? What that this company losing money, man. You know, when the companies are losing in this market environment, those companies go banana. So that's, you got to be careful. That's you talking about, right? Huh? Somebody asked me something, I don't know. Okay, anyway, folks, then PayPal. I don't know whether PayPal Zillow dumping. PayPal is going up. PayPal is going up a little bit. Earning, let me see if I came out. Not yet. Oh, PayPal. Nope. Or PayPal is flying high. PayPal. PayPal, Etsy, Roku, Allstate, Fastly, Solar, AIG. These are the today's earning. These are the earnings coming out today. Yours, can you take a look at UPST? You have a put on UPST on today you bought after market bounce. This is not good. UPST slight weak, but earning could be a good, folks. Okay, they beat earnings probably. So you see this sloping support is intact. So right now is little bullish. You need to give a little time on UPST. Yeah, you can't buy like that, man. Put. You need to make sure the market conditions worsen, then you can go and jump. Okay. Anyway, no problem. That's fine. But all right. So let's call it a day, folks. You know what? Now, let me go a little bit and got to start the class later. So okay. All right. So see you guys. All right. See you guys tomorrow morning, 9:30, folks. Okay. Take care, everybody, and see you tomorrow. Bye.